double back, double back. Yeah, Andy and Lisa, you can just imagine the shock and hustle for this woman. She's inside her home doing some normal household chores this morning, and all of a sudden she tells me she heard that loud bang. Her house then started shaking. She tells me it felt like a train was racing by in her backyard. The electricity went out at that point, and then she had to run outside with her son to really figure out what was going on. Her neighbors told her, hey, there's a fire behind your house right now. So they took off with her son. She tells me then she ran back inside, grabbed the dog and some important documents, and then she was able to get out of there in just a few minutes. But yeah, like you mentioned, she did have some issues with her car as soon as she was trying to get out of there. And I want to show you, I mean, this is what the flames still look like some 5 hours into this. It's incredible coming into this area because you can see these flames from just about every single direction. So as that woman was able to scramble away quickly earlier, she tells me that these flames were actually just about a park and 2 homes away from her house. So she's really close. I think one of the people who we spoke to who actually lives closest to this fire. And then this is what happened once she got outside. That gives you an idea of just how hot this fire is. And right now, after speaking with her, she still really doesn't have any idea if her home has any sort of damage at this point. She has seen on the news that there have been some crews spraying water on her house, but again, she's not sure if that's just because the fire is so hot and they're trying to keep it cool, or if because there is any sort of damage, because she did, of course, evacuate. Another neighbor told me that his wife was inside. She heard a loud hissing, followed by that big boom. And then others that I've talked with too, you know, they've been at work today. And again, these are the people who live closest to where this fire is burning. One person told me that he doesn't even know if his dog is okay at this time. He called the police here and hoped that that message could get to the firefighters. So there's still so much uncertainty for people who live in this area as the road here remains closed and this fire continues burning. Andy and Lisa. after you. I'm gonna have to stand in the sun. We're gonna be after Joe. Terrible shadows. Yeah, luckily Andy and Lisa, she was able to drive away pretty quickly, unharmed, but she says that it got so hot, so fast, that really she did end up with some damage to her vehicle, and she only lives a couple homes away from where these flames are shooting out. been in touch with some of the others who live close to this fire. They tell me that they heard a loud hissing or a boom. Others are still at work, so they haven't even been able to get home to see how their home is doing. And right now, out of all of these people who live nearby who I've spoken with, they tell me that they are just not sure if their house is okay. They also have not been given any sort of indication from city leaders here about when they may be able to get back inside their homes. Andy and Lisa. Can't see the flames behind my head in the first one. Well, I should have been in a different spot, maybe.
I thought you were a little frazzled. I didn't want to tell you.
No, I was good. I would rather have the shot look good. Showing in the last shot? You could not see the flames again? When you move. Well, next time tell me to get on the side and I'm happy to. I don't know.
A stunning move for the lead, composure under pressure, a brilliant second win of the season. In Azerbaijan, Oscar Piastri had everything under control.
After the strange drama of Budapest and the near miss in Monza, this will be so sweet for Oscar Piastri. This time he can drink it all in. Oscar Piastri wins the Azerbaijan Grand Prix, and it will be a sequel to celebrate. The Australian is a Grand Prix winner for the second time.
Well done, everybody. That was probably the most stressful afternoon of my life. So what a day that was.
And behind the McLaren man, chaos.
We're heading into the wall at high speed. Out goes Perez. Out goes Carlos Sainz. Extraordinary.
At the front, Piastri was perfect. Leclerc lost out, Lando gained some useful points on Max Verstappen, and rookies Franco Colapinto and Ollie Behrman scored points. And we have new leaders in the Constructors' Championship. There is so much to talk about. Welcome to the Baku paddock for F1 Nation's review of the Azerbaijan Grand Prix. I'm Tom Clarkson, and with me is Sky Sports F1 presenter Natalie Pinkham. Pinkham, are you all right?
I'm great. It's lovely to see you again, particularly after what was such an intense, dramatic 50-odd laps around
The perfect way to
Baku.
describe it. Intense. From the start, but
Yeah.
particularly from lap 20 when Oscar made the move.
Great move, lap 20. I think it caught Charles by surprise. And then what ensued was balletic at times, beautiful to watch, incredible defence. Oscar called it the most stressful day of his life, but it didn't show. He seemed to have everything under control. I felt for Charles. This is the fourth time he's started from pole position and hasn't converted it into a win. He's never won around the streets of Baku before, and I really thought today was going to be his day. But, you know, when you consider
Go ahead. Oh, yeah. Yeah, I don't know if you've noticed, but there are firefighters all around the fire on the north side of Spencer, south side of Spencer. I just noticed they were putting some water onto some homes. The one that Doug was talking about is on East Meadow Drive. That's where we saw some of the flames and smoke inside some of those homes. And then just east of the flames, there's that Walmart there and some businesses where they look like they're trying to put some water on. But look at all that grass that is charred. We have that vehicle that definitely does not look like a utility truck. It is just, it looks like a personal vehicle there, trying to find out exactly why it was there, how it got there. And then again, these flames just don't look like they're any less. Still about 300-400 feet into the air, and we're at about 1,000 feet up in the air, about a mile away from the center of those flames. Jonathan? Yeah, hold on. Let me check with the pilot. What's our fuel? An hour 10. An hour 10. I can hear you now. Yeah, I can hear them. That is the park. Myra, yeah, that is the park that Don Armstrong was mentioning earlier. You can see how charred it is, and unfortunately, the playground equipment melted as well. And you can see the ladder trucks. Again, that is just west of those flames, where it looks like there's at least 2 homes that have been damaged by the flames and the smoke. You can see how the tile is just melted off. Some of them ripped off from some of the water as they soak those homes, trying to save them. And then I'm going to zoom out here, and you can see Spencer Highway closed in both directions. And to the right of that, south of that, we've got more flames that jumped and charred that area. The RV home park that Pooja was talking about right there, it looks like maybe one home might have sustained some smoke or some flames, and you can see how they're soaking that one trailer park there. Again, ladder trucks all around these flames. Walmart right behind that, where again, it doesn't look like there's any movement. Those cars still sitting there in the parking lot. More than likely, people hunkered down inside that building. Back to you guys. Unfortunately, this started around 10 o'clock this morning, and those flames do not look any smaller. And unfortunately, since I've reached here with my pilot, John Wallen, the flames have affected several more homes. When we first got here, there was just one home that looked like it was affected. But now, as you can see by these pictures, it does look like more are succumbing to the flames, maybe jumping the lines, and we're starting to see some smoke coming out of some of those homes. Again, now Spencer Highway on the south side, and that RV park looks like those homes are now being affected. When we first arrived here, we did not see that. And just surprised at flying 1,000 feet above in the air, those flames not getting any smaller right now. Back to you guys. Well, in these type of instances, I've covered so many fires, it's usually like an ember or something like that will jump. Even though the wind's quite calm, I believe they said only about 5-10 miles per hour, the intensity of the heat, again, that playground that you saw earlier just looked like it was heating the playground equipment. And then you've got embers kind of jumping because, those flames are shooting pretty much straight up into the air. The only thing that I can think of is the embers kind of jumping over like the road. You see how charred it is, and then again affecting all that grass. So unfortunately, this doesn't look like it's getting any better. We can just hope and pray that they found, that shut-off valve, that they need to shut off the source of what's in the tank, and then hopefully, we got to just be patient until it kind of burns out. But mainly, those firefighters like in a defensive mode, as we say, as they're trying to save homes and property. Back to you guys. Hey, Don, and I just want to, or Doug, I just want to point out on this side, again, it cuts out quite a bit for maybe like a minute until we get on the south side. Yeah, I'm just letting him, yeah, no, I'm just letting him know when it cuts out.
don't mind. I'm doing qualified by Spencer. Yes, I can still apply for help. Are you around here? Okay. Okay. I'm not far from this will access to the lunch. You access the lunch. Oh, you buy the cake from it? So that's yes, that's what I mean. You take a picture of that, right? You know what's this?
Doug, news desk. Sky High's leaving.
Oh, you got it. Look at the car.
I knew I didn't grab it.
Here's your keys.
Thank you.
Test, 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 test. Jerry, can you hear me? Test, 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 test. Perfect. Give me 10 seconds to figure out where I am. Spencer and Cunningham. You can't hear me? Oh, turn your knots mic off.
Hey, Doug, just to let you know, when we're on the east side of the flames, that's when the IFP cuts out a little bit. When we're on the east side of the flames over Walmart, that's when it kind of cuts out. Go ahead. Oh, yeah. Yeah, I don't know if you've noticed, but there are firefighters all around the fire on the north side of Spencer, south side of Spencer. I just noticed they were putting some water onto some homes. The one that Doug was talking about is on East Meadow Drive. That's where we saw some of the flames and smoke inside some of those homes. And then just east of the flames, there's that Walmart there and some businesses where they look like they're trying to put some water on. But look at all that grass that is charred. We have that vehicle that definitely does not look like a utility truck. It is just, it looks like a personal vehicle there, trying to find out exactly why it was there, how it got there. And then again, these flames just don't look like they're any less. Still about, 300-400 feet into the air, and we're about 1,000 feet up in the air, about a mile away from the center of those flames. Jonathan? Yeah, hold on. Let me check with the pilot. What's our fuel? An hour 10. An hour 10. I can hear you now. Yeah, I can hear them. That is the park. Myra, yeah, that is the park that Don Armstrong was mentioning earlier. You can see how charred it is, and unfortunately, the playground equipment melted as well. And you can see the ladder trucks again. That is just west of those flames, where it looks like there's at least 2 homes that have been damaged by the flames and the smoke. You can see how the tile is just melted off. Some of them ripped off from some of the water as they soak those homes, trying to save them. And then I'm going to zoom out here, and you can see Spencer Highway closed in both directions. And to the right of that, south of that, we've got more flames that jumped and charred that area. The RV home park that Pooja was talking about right there, it looks like maybe one home might have sustained some smoke or some flames, and you can see how they're soaking that one trailer park there. Again, ladder trucks all around these flames. Walmart right behind that, where again, it doesn't look like there's any movement. Those cars still sitting there in the parking lot. More than likely, people hunkered down inside that building. Back to you guys. Unfortunately, this started around 10 o'clock this morning, and those flames do not look any smaller. And unfortunately, since I've reached here with my pilot, John Wallen, the flames have affected several more homes. When we first got here, there was just one home that looked like it was affected. But now, as you can see by these pictures, it does look like more are succumbing to the flames, maybe jumping the lines, and we're starting to see some smoke coming out of some of those homes. Again, now Spencer Highway on the south side, and that RV park looks like those homes are now being affected. When we first arrived here, we did not see that. And just surprised at flying 1,000 feet above in the air, those flames not getting any smaller right now. Back to you guys. Well, in these type of instances, I've covered so many fires, it's usually like an ember or something like that will jump. Even though the winds are quite calm, I believe they said only about 5-10 miles per hour, the intensity of the heat, again, that playground that you saw earlier just looked like it was heating the playground equipment. And then you've got embers kind of jumping because, those flames are shooting pretty much straight up into the air. The only thing that I can think of is the embers kind of jumping over like the road. You see how charred it is, and then again affecting all that grass. So unfortunately, this doesn't look like it's getting any better. We can just hope and pray that they found, that shutoff valve, that they need to shut off the source of what's in the tank, and then hopefully, we got to just be patient until it kind of burns out. But mainly, those firefighters like in a defensive mode, as we say, as they're trying to save homes and property. Back to you guys. Hey, Don, and I just want to, or Doug, I just want to point out on this side, again, it cuts out quite a bit for maybe like a minute until we get on the south side. Yeah, I'm just letting him, yeah, no, I'm just letting him know when it cuts out.
Hi, Mike. I'm doing a qualified last next. Yes, I see the fire. Are you around here? Okay. Okay. I'm not far from where you are. You still access the live shot? You access the live shot? Oh, you might be coming from okay, so you guys are going to yes, that's right. You send me an live. Did you take a picture around the day? You know what's this?
Doug, news desk. Sky High's leaving. Oh, you got it.
Who do you think they are?
I knew I didn't grab it.
Here's your keys.
Thank you.
Test, 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 test. Jerry, can you hear me? Test, 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 test. Perfect. Give me 10 seconds to figure out where I am. Spencer and Cunningham. You can't hear me? Oh, turn your knots mic off.
Hey, Doug, just to let you know, when we're on the east side of the flames, that's when the IFP cuts out a little bit. When we're on the east side of the flames over Walmart, that's when it kind of cuts out. Go ahead. Oh, yeah. Yeah, I don't know if you've noticed, but there are firefighters all around the fire on the north side of Spencer, south side of Spencer. I just noticed they were putting some water onto some homes. The one that Doug was talking about is on East Meadow Drive. That's where we saw some of the flames and smoke inside some of those homes. And then just east of the flames, there's that Walmart there and some businesses where they look like they're trying to put some water on. But look at all that grass that is charred. We have that vehicle that definitely does not look like a utility truck. It is just, it looks like a personal vehicle there. trying to find out exactly why it was there, how it got there. And then again, these flames just don't look like they're any less. Still about 300-400 feet into the air, and we're at about 1,000 feet up in the air, about a mile away from the center of those flames. Jonathan? Yeah, hold on. Let me check with the pilot. What's our fuel? An hour 10. An hour 10. I can hear you now. Yeah, I can hear them. That is the park. Myra, yeah, that is the park that Don Armstrong was mentioning earlier. You can see how charred it is, and unfortunately, the playground equipment melted as well. And you can see the ladder trucks. Again, that is just west of those flames, where it looks like there's at least 2 homes that have been damaged by the flames and the smoke. You can see how the tile is just melted off. Some of them ripped off from some of the water as they soak those homes, trying to save them. And then I'm going to zoom out here, and you can see Spencer Highway closed in both directions. And to the right of that, south of that, we've got more flames that jumped and charred that area. The RV home park that Pooja was talking about right there, it looks like maybe one home might have sustained some smoke or some flames, and you can see how they're soaking that one trailer park there. Again, ladder trucks all around these flames. Walmart right behind that, where again, it doesn't look like there's any movement. Those cars still sitting there in the parking lot. More than likely, people hunkered down inside that building. Back to you guys. Unfortunately, this started around 10 o'clock this morning, and those flames do not look any smaller. And unfortunately, since I've reached here with my pilot, John Wallen, the flames have affected several more homes. When we first got here, there was just one home that looked like it was affected. But now, as you can see by these pictures, it does look like more are succumbing to the flames, maybe jumping the lines, and we're starting to see some smoke coming out of some of those homes. Again, now Spencer Highway on the south side, and that RV park looks like those homes are now being affected. When we first arrived here, we did not see that. And just surprised at flying 1,000 feet above in the air, those flames not getting any smaller right now. Back to you guys. Well, in these type of instances, I've covered so many fires, it's usually like an ember or something like that will jump. Even though the winds are quite calm, I believe they said only about 5-10 miles per hour, the intensity of the heat, again, that playground that you saw earlier just looked like it was heating the playground equipment. And then you've got embers kind of jumping because, those flames are shooting pretty much straight up into the air. The only thing that I can think of is the embers kind of jumping over like the road. You see how charred it is, and then again affecting all that grass. So unfortunately, this doesn't look like it's getting any better. We can just hope and pray that they've found that shutoff valve, that they need to shut off the source of what's in the tank, and then hopefully we got to just let be patient until it kind of burns out. But mainly those firefighters like in a defensive mode, as we say, as they're trying to save homes and property. Back to you guys. Hey, Don, and I just want to, or Doug, I just want to point out on this side, again, it cuts out quite a bit for maybe like a minute until we get on the south side. Yeah, I'm just letting him, yeah, no, I'm just letting him know when it cuts out.
Hi, Mike. I'm on William Boulevard, Las Vegas. Yes, I can see the fire. Are you around here? Okay. Okay. I'm not far from where you still access the light shop. You access the light shop. Oh, you might be clean comment. So you guys yes,
Hello, Doug. News desk. Sky High's leaving.
Who do you think we are?
I knew I didn't grab it.
Here's your keys.
Thank you.
Test, 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 test. Jerry, can you hear me? Test, 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 test. Perfect. Give me 10 seconds to figure out where I am. Spencer and Conningham. You can't hear me? Oh, turn your knots mic off.
Hey, Doug, just to let you know, when we're on the east side of the flames, that's when the IFP cuts out a little bit. When we're on the east side of the flames over Walmart, that's when it kind of cuts out. Go ahead. Oh, yeah. Yeah, I don't know if you've noticed, but there are firefighters all around the fire on the north side of Spencer, south side of Spencer. I just noticed they were putting some water onto some homes. The one that Doug was talking about is on East Meadow Drive. That's where we saw some of the flames and smoke inside some of those homes. And then just east of the flames, there's that Walmart there and some businesses where they look like they're trying to put some water on. But look at all that grass that is charred. We have that vehicle that definitely does not look like a utility truck. It is just, it looks like a personal vehicle there, trying to find out exactly why it was there, how it got there. And then again, these flames just don't look like they're any less. Still about, 300-400 feet into the air, and we're at about 1,000 feet up in the air, about a mile away from the center of those flames. Jonathan? Yeah, hold on. Let me check with the pilot. What's our fuel? An hour 10. An hour 10. I can hear you now. Yeah, I can hear them. That is the park. Myra, yeah, that is the park that Don Armstrong was mentioning earlier. You can see how charred it is, and unfortunately the playground equipment melted as well. And you can see the ladder trucks, again, that is just west of those flames, where it looks like there's at least 2 homes that have been damaged by the flames and the smoke. You can see how the tile is just melted off, some of them ripped off from some of the water as they soak those homes, trying to save them. And then I'm going to zoom out here, and you can see Spencer Highway closed in both directions. And to the right of that, south of that, we've got more flames that jumped and charred that area. The RV home park that Pooja was talking about right there, it looks like maybe one home might have sustained some smoke or some flames, and you can see how they're soaking that one trailer park there. Again, ladder trucks all around these flames. Walmart right behind that, where again, it doesn't look like there's any movement. Those cars still sitting there in the parking lot. More than likely, people hunkered down inside that building. Back to you guys. Unfortunately, this started around 10 o'clock this morning, and those flames do not look any smaller. And unfortunately, since I've reached here with my pilot, John Wallen, the flames have affected several more homes. When we first got here, there was just one home that looked like it was affected. But now, as you can see by these pictures, it does look like more are succumbing to the flames, maybe jumping the lines, and we're starting to see some smoke coming out of some of those homes. Again, now Spencer Highway on the south side, and that RV park looks like those homes are now being affected. When we first arrived here, we did not see that. And just surprised at flying 1,000 feet above in the air, those flames not getting any smaller right now. Back to you guys. Well, in these type of instances, I've covered so many fires, it's usually like an ember or something like that will jump. Even though the winds are quite calm, I believe they said only about 5-10 miles per hour, the intensity of the heat, again, that playground that you saw earlier just looked like it was heating the playground equipment. And then you've got embers kind of jumping, because, those flames are shooting pretty much straight up into the air. The only thing that I can think of is the embers kind of jumping over like the road. You see how charred it is, and then again affecting all that grass. So unfortunately, this doesn't look like it's getting any better. We can just hope and pray that they found that shut-off valve, that they need to shut off the source of what's in the tank, and then hopefully we got to just let be patient until it kind of burns out. But mainly those firefighters like in a defensive mode, as we say, as they're trying to save homes and property. Back to you guys. Hey, Don, and I just want to, or Doug, I just want to point out on this side, again, it cuts out quite a bit for maybe like a minute until we get on the south side. Yeah, I'm just letting him, yeah, no, I'm just letting him know when it cuts out.
into it. It's the last number before the announcement. But for what it's worth, there is a decline expected. US retail sales for August, the decline expected is 0.2%. If you strip out auto sales, then there might be a 0.2% increase. So just placing that number on the table for you. Let's come here home and look at the fund flow picture to begin with. For a change, we had FIIs that were net sellers. About 1,600 crores of net sales came through, and the DII number was not that big. It was still good. It was still supportive, about 750 crores of buying. But the FII selling was outstripping the DII buying at least yesterday. I just want to pick up from some of the interesting comments we got from the finance minister, and we'll play this out as the show progresses later on three important points. She was speaking at a News 18 event. On the market, she did make a reference to the exuberance and how investors need to be cautious. She said that there needs to be caution on the exuberance in the market. People should understand the risks of equity market and then participate. So, some hint over there. There was a first public statement on the SEBI chief and all that's been flying around, the allegations that have been flying around. She said quite a few allegations have been answered by Madhavi Buch and her husband. And then she says, and I quote, the facts will have to be taken on board in the Madhavi Buch situation. So this is the first public comment by a government head, by a minister on this entire matter. Last but not the least, we have been hearing increasing chatter around quick commerce and whether there needs to be more regulation. Watch out for stocks like Zomato. The Swiggy IPO is coming as well. What did the finance minister say? She said that it's important to take care of small traders and retailers. If deep pockets and predatory pricing is affecting small retailers, then we should look at it. Remember, the e-commerce policy is still in the making, and it's been waiting in the wings for a long, long time. And we've heard other ministers also comment on this, including Mr. Piyush Goyal. And yesterday was the finance minister's turn to talk. So just something to keep on the radar as you're evaluating perhaps positions around some of these stocks. Quickly moving on, yesterday the market was very, very stock specific, and I reckon that as we wait for the big Fed announcement, maybe that's going to be the shape of things today as well. Lots of stocks, and just to give you a flavor and a sampling, we've been talking about this board meeting of Easy Trip Planners. It got pushed from the 13th to 17th, which is today. They're apparently going to consider acquisition, so let's see what comes out over there. First Source is partnering with Microsoft Azure for OpenAI. The word AI gets the market excited. There are no contours of this deal, but anyway, we'll watch out for the stock. Vedanta, Nigel's been updating us on Vedanta as well. They've got issues around, one of their major facilities. It's a dike breach in Odisha at their major facility. The company issued lots of statements. We'll tell you more about it as we go forward. Short point, as usual, it's probably going to be more stock specific in nature because at the headline level, I guess, the market's still waiting for the big event to get out of the way, which is the Fed meet, Nigel.
Well, that's right. I think the dollar index that's holding at around a one-year low, well, that bodes well, right, for an emerging market like India. The probability now of the Fed cutting rates has moved up by around 50 basis points, and that's a double-edged sword, right, because you have interest rates that will be down, but it could suggest that growth as well is fairly weak. And we'll have the Nifty Financial Services Index that will play out the weekly expiry as well. So that's going to be important. What about yesterday? We saw a bit of a short covering bounce that played out, both on the Nifty as well as on the Nifty Bank. We did have the open interest that was a little bit lower in yesterday's session. How about positioning? The FIs, they're net long, 68% of their positions on the long side. Even in absolute terms, both the FIs as well as the clients, they're in opposite ends of the spectrum. Moving to the options data, in yesterday's trading session, you had the 25,400 put that was fairly active. There was some writing that was seen at that particular level, which tells you that in the near term, the 25,250, 25,300 level, that's very, very important. But yesterday's high at around the 25,450, that becomes a crucial resistance zone. And I'll tell you what, for those that may not be able to fathom the kind of volatility that we're bracing for, maybe taking some money off the table at the start today could be an option as well, given that we have a big event that will play out. Moving to the Nifty Bank, well, the 20 DMA is important. The near-term support going by the options data is at around the 51,500 odd mark. The metals pack that's going to be in focus because of the weaker dollar, and Vedanta would be the ideal stock. But that stock has some stock specific issues. So that's why we're looking at Infra, a stock that has corrected 25% from the recent peak. It took support at around that 620 odd level, and yesterday it moved up on higher volumes. So maybe Infra is a stock you keep on your radar. The metals pack, clean balance sheet, and it's got some tailwinds working for it as well.
All right, Nigel, thanks very much, and have a glass of hot, warm water, maybe something. But it's Nigel with, what he's watching out for, some of the stocks as well. Richard Harris is Chief Executive Officer at Port Shelter Investment Management. Richard, good to have you with us here. It's a pleasure as always. Thank you for your time. I think questions around now how to trade the easing cycle and how much, what would it mean for emerging markets? Let's kick it off there. Richard, I was saying yesterday that the great thing, I mean, absolutely wonderful thing would be if you get a decent retail sales report and a 50 basis point cut, best of both worlds. I don't know what you think of it, and your thoughts, EMs. Go on.
Yes, well, of course, maybe the market's already thought of that, which is why it's done quite well. But I've been saying for a while, I think this this bull market, certainly in the US and Western markets, is likely to continue. Because the underlying economies are still quite strong, and the Fed looks as if it's moving in terms of reducing rates. I'm not sure it has to reduce rates, and I'm not sure if the amount that they're likely to reduce, even if it's 50 basis points, is going to make that much difference. But it does give a lot of succor to the markets in terms of how they should be feeling. So all in all, I think that although we have seen a couple of dips where markets have got concerned, if the market does come off, the Fed has got plenty of ammunition to turn it around again, and they seem rather susceptible to suggestions that they do cut rates if markets fall. So I think at the moment we're in a pretty sanguine position, and referring to emerging markets, that's likely to continue because I think what's happening now is that international investors are looking to say, okay, we've had a good run in the US. What other markets are there? Is it Europe? Is it different sectors? I think emerging markets certainly stands out as one of those. The other one is small caps, but emerging markets is the granddaddy of those in terms of sectors. So the picture, I think, from the international side doesn't look too bad.
Richard, hi, great to have you on the show. So if emerging markets are going to start drawing more attention, then which ones do you think will be top of mind? Where does India fare, considering that China, the data is still very weak, at least at a macro level coming out of that country?
Well, this is the conundrum, of course. We talk about emerging markets, but, first of all, are they really emerging? If you look sensibly at even places like India and China, they're not developing anymore. They're getting very close to developed. And what we call developed markets are actually starting to come almost post-developed, where you've got a return of potholes, debt, and difficulty getting health services. So we've got to be careful about this term emerging markets. China is a very, very different picture now to India. China, I think, is still suffering from the hangover from the lockdowns of COVID, and there's a real loss of confidence, and I think only a big move by the PBOC is likely to see confidence start turning around. In India, we've almost got the opposite situation. Economic growth is good. The picture seems fairly healthy. Even foreign investors generally want to invest. And I think India has perhaps learned from mistakes in the past that if the government or if the authorities tinker too much in the economy, you end up actually slowing it down. At the moment, things seem to be relatively open, and that's why India's at an all-time high.
So let me ask you, Richard, where would you put every additional $100, say? Would it be India? Would it be gold, which is still flying high? Would it still be US tech companies? Break it up for us.
Well, as an international investor, the US is still very attractive. There are going to be plenty of stories in the tech sector. The tech sector is the darling of our age. Previously it may have been TV. Earlier in last century, it was the auto sector. Prior to that, it was things like shipbuilding, railways. There's always a darling of the sector in a particular era, and at the moment it's tech. So it's very difficult not to be in it. But I'm actually recommending to clients that they actually look to diversify a little bit. I'm not quite so keen on the bond markets, even though we may see falling rates. I don't think they'll fall as much as people think. And then that leaves sectors like emerging markets, small caps, where I think more allocation can be made. especially if you feel that there is going to be a near-term recession in the Western world. So those are the areas I'm looking at, with a special attention to active EM funds, because then they're going to focus more on the individual stocks rather than market cap, because if you have market cap, then you invest a lot in China at the moment. China's still a little way away from being there, and I think that you need to have an active market process in emerging markets.
All right, we'll leave it there. Richard, great conversation as always. Thank you very much for your time. Appreciate it. Well, that's the first view coming in on global markets. Well, we'll get you some more opinion here. Rajiv Batra of JP Morgan weighs in, and he says that since the end of April, our tracking of business cycle conditions in India has moved into quote-unquote late cycle. He says while a deep downturn in growth is not expected, such late cycle conditions are normal in markets as balance of risk perceptions shift and tend to repeat every 2 to 3 years. He believes present episode could last another nearly 3 months, which means that the index may struggle for upside over this period. Internally, the late cycle rotation that has been in play may continue, according to Rajiv.
So we have a lot of stock-specific action to track today as well, and we'll get to it in our special top 10 segment in just a bit. We're looking at Samvardhana, Motherson, Vedanta, Edelweiss Finance, JK Tyre, Carborundum, Universal, Sandur Manganese, and Indocount, all of them on the back of positive news flows. SpiceJet and India Shelter Finance could be on the red side. We'll tell you why in just a bit after this quick break. Back in a moment.
For rate reduction, for better standard deduction, because the uniqueness of income tax, not just in India, anywhere, is when you give a certain income bracket, a certain rate, suppose you say 0 to 5 lakhs, no tax, nil. That up to 5 lakhs you don't need to pay a tax is not just for those who are earning 5 lakh. It will apply to the first 5 lakh of a person who's earning 150 lakhs also. So it is a benefit given keeping in mind the poor, the middle class. But it will apply to anyone who's got higher. Naturally, that's the law of the country, and that's the, a common sense argument. So that benefit given to a middle class will also fill in into everybody's income who's in the higher net worth also. So that is why the exemption, standard deduction, has been increased, which will be only for the salaried class. So we are looking at various ways in which the middle class will be given the benefit, and the higher net worth are not getting benefit because of that, and therefore, we let them go simply. That doesn't happen. So the ways in which we are bringing these, reductions to benefit the middle class are being carefully looked into, and only then we are taking a call. And now, up to 7 lakhs, there is no tax to pay.
एक चीज़ ये समझने की कोशिश है कि और जो बोल्ड रिफॉर्म्स है, जैसे वन नेशन वन पोल, जो कि प्रधानमंत्री ने जिसके बारे में बात की है, क्या इसको आप आगे बढ़ा पाएंगे इस सरकार में?
इसमें कंसल्टेशन पूरे हो चुका है, और इसमें ये भी है जनता।
Welcome back. Well, as usual, the market is looking at a lot of specific stocks, and that's where the action has been in the last couple of sessions. Let's straight away get to our list then. This morning, our team is standing by with a list of top stocks to watch. Guys, thanks for joining in. Vivek, let me kick it off with you. Why are you looking out for Samvardhana and SpiceJet?
Well, good morning. Two stocks in focus on the back of large QIPs that both of them have announced. So Samvardhana, Motherson, the one that we are looking at first. Remember, our colleague Sudarshan had told you earlier that the company is in the market to go ahead and raise funds, and most likely that particular fundraise would be via the QIP process. So along expected lines, the company has launched the fundraising process both to raise funds via both the QIP route as well as a certain proportion of funds will be raised by the compulsory convertible debentures route. So the equity issue size is close to 6,398 crore. The issue price is in the range of 186.3 to 193.7 rupees a share. So that works out to an equity dilution of close to 5% of the total equity. Along with that, via the CCD issue, the company is looking to raise close to 2,250 crore. What will the company do with the funds? The company is looking to go ahead and repay debt, and that will be the main purpose of this particular fundraise. Now, talking about SpiceJet, again, a large QIP announced over here as well. Issue size of close to 3,000 crore, which includes the base size of 1,500 crore and a green size option if the company chooses to do so of another 1,500 crore. The indicative issue price is at a steep discount, almost 61.6 rupees per share, and equity dilution thereby works out almost 38% of the post-issue paid-up equity share capital. What will the company do with the funds? Payment of statutory dues, outstanding liabilities, maintenance of existing fleet, as well as employment dues. So as far as SpiceJet is concerned, very important that this particular fundraise goes through.
Okay, all right, Vivek, thanks a lot for that. When I'm looking at Vedanta, and yes, the stock did see a sharp correction in trade. That's because the storage pond, which is linked to their alumina refinery, there was an overflow out there, or there was a disruption out there. Now the street was fearing the worst case outcome, because in case the alumina refinery itself got shut, then they would have to buy alumina from the outside market and pay nearly around $100 to around $200 per ton extra. So that was one fear. The second fear is this particular facility has always been in light of the environment groups. So, it could turn the heat on them with regard to that. But the management, we reached out to them and they've given us clarifications. They're saying there are no disruptions with regard to the alumina refinery, which is good. They're operating as of now in compliance with regulatory requirements. So that's good. And they're saying there's no damage and this situation is under control. So the street will draw hard from the fact that the alumina refinery is now functioning. The problem is sometimes these kind of cases escalate because of the damage that's seen out there. So the stock opens up in the green, but we'll have to see what happens from there on. That's what happened. Midday, the news article did come out, and in fact from there, the stock sold out. So we expect the stock to open up well in the green.
Okay, so Vedanta is going to be in focus for sure. Thanks for that, Nigel. Let's go back to Vivek. He's tracking some block deals as well. Vivek, which stocks?
Well, that's right. Large fundraisers, large equity offerings are seen. So yesterday, India Shelter Finance, we saw a very sharp reaction in the stock yesterday. So two funds, both under the name of Nexus Opportunity Funds. The fund number 2 sold 1.35% of the total 5.43% that they held in the company. Nexus Ventures 3 Limited sold close to 4.62 out of the total 15.9% stake in the company. Amongst the key buyers, some of the names included ICICI Prudential Life Insurance, SBI Life Insurance, Petronas Research, as well as Goldman Sachs India Equity Portfolio. And the second stock on the radar, again in a block deal over here as well, Edelweiss Financial Services, the Employees Welfare Trust sold close to 27.5 lakh shares yesterday. Amongst the buyers was Whito Capital Asset Management Fund. Under two separate names, they picked up 12.7 lakhs and 14.8 lakh shares respectively yesterday.
All right, Vivek, thank you very much for that. So that's Edelweiss in focus. Now, JK Tyre and Carborundum Universal are going to be the other two we want to put the spotlight on. Vinny is here with details. Vinny, morning.
Good morning. Yes, JK Tyre, we're expecting some positive move here because the shareholders have actually approved the merger of JK Tyre with Cavendish, and the exchange ratio, or in terms of the ratio that is there for shares, we're going to see 92 shares of JK Tyre will be given to every shareholder holding 100 shares in Cavendish. Now, this acquisition of Cavendish had happened for JK Tyre in 2016. This is the merger that will be taking place. So the swap ratio for that is mentioned. Positive why for JK Tyre? Because this gives them synergies in terms of operational synergies, reduction in terms of cost, consolidated sales start improving, distribution in terms of network, and enhancing the shareholder value is something that are key positives for JK Tyre. Moving on, we have Carborundum Universal, also some bit of a positive news flow here, expecting it to be in the green. They will be acquiring 100% stake in a US-based China-based company that is Silicon Carbide Products. This is for 56 crores. This will help Carborundum Universal in expanding its geography-wise improvement in the US market, because SCP has a very good clientele in the US market, so market share improvement there, geography footprint that will be expanding in the US as well as beyond the US as well. So interesting to watch out for both these stocks.
Okay, got it. Thanks very much for that, Vinny. Let's move to Vamakshi now. She is looking at a couple of stocks on the radar as well. Vamakshi, good morning.
Well, good morning, Surbhi. Let me first start off with Sandur Manganese, and that is because the company has gone ahead and given its nod to raising of funds up to 1,000 crores via QIP. So given that development, going with the green out here, the next counter that I'm watching out for is EMS. A board meeting is scheduled on September 19th, and they are expected to consider fundraising plans via various modes, which includes GDRs, ADRs, QIP, among several others. Lastly, let's also focus in on IndoCount. Now, the US-based subsidiary of this company, which is IndoCount Global Inc., has acquired an 81% stake in Fluvitex USA for nearly 19.63 million, which roughly translates to around 165 crores. Fluvitex, in fact, is a manufacturer of utility bedding and has products like pillows as well as quilts. They also have an exclusive option to purchase the remaining 19% stake at the same valuation, and the 19% stake would be bought at $4.6 million, or roughly around 39 odd crores. Largely, this acquisition is expected to be funded by internal accruals as well as debt, and the company says that it aligns with its own strategy to expand presence in the Northern American markets and also increase its market share as well as distribution reach out there. So overall, given this development, going with the green for IndoCount as well.
Okay, got it. Thanks very much, Vamakshi, for that. So let's quickly recap our list of stocks to watch. The ones that have positive news flow around them are Samvardhana, Motherson, Vedanta, Edelweiss Financial Services, JK Tyre, Carborundum Universal, Sandur Manganese, EMS and IndoCount. The ones with negative news flow around them are SpiceJet and India Shelter Finance. Okay, that's our stock list for the morning. Let's now figure out what's happening in the world of commodities. We have Manisha joining in with a roundup of all the action. Manisha, good morning. So what's catching your attention today?
Morning, Surbhi. I'll start with the crude oil prices, which have extended gains today as well. With this, now the Brent is trading above $73 a barrel. Nearly 20% of Gulf of Mexico oil production is offline, and that seems to be giving support. And apart from that, it is the weakness in US dollar, expectations, anticipations ahead of the US Fed meeting, and that really seems to be fueling this rally. So not just crude oil prices, most of the metals are trading on a firmer note as well. Copper is at an 8-week high, zinc at a 9-week high. Aluminum and tin are trading at a 3-week highs as well. Markets are looking at an immediate support also coming in from buying in the European markets there. When you look at the agriculture commodities, well, you have coffee trading at a 13-year high, cotton is trading at a 3-week high, rubber at 2021 highs. So most of the commodities, whether it's agri and non-agri, ahead of the US Fed meeting, clearly seems to be looking at some buying opportunities.
It's interesting. Manisha, thanks very much for that. Prashant, last I checked, the world was heading into a slowdown / recession, right? And look at Manisha telling us about these, multi-week, multi-month highs.
Absolutely. I think the world is heading into a bit of a slowdown, but, commodities are looking strong across the board. We'll take a quick commercial break here. We're going to come back. Amnish Agarwal, head of research at Prabhudas Leather, is going to be with us for some fundamental stock conversation that's coming up in just a bit.
इतना हो रही है, साल भर हो रही है, हर राज्य में हो रही है, पंचायत के स्तर पर हो रही है, फिर भी इन सब का असर दूसरे एक विषय है जिसमें हम सब ध्यान देना चाहिए। हर चुनाव के 3 महीने पहले और 3 महीने बाद तक रिजल्ट आने 3 महीने नहीं, रिजल्ट आने तक कोई डेवलपमेंटल एक्टिविटी उस एरिया में नहीं हो पाता। देन यू सीक परमिशन फ्रॉम इलेक्शन कमीशन, ये प्रोजेक्ट तो पहले से है, इसको चलने दीजिए, वो एडमिनिस्ट्रेशन का एक और हिस्सा बन जाता है। इसीलिए ऐसे डेवलपमेंटल एक्टिविटीज़ का रुकावट बार बार होना और हर चुनाव का उनके स्तर पर खर्च उठाना, ये सब नेशनली अवॉइडेबल एक्सपेंडिचर। इसीलिए वो आइडिया का इनपुट इतने सारे और एक उच्च स्तरीय कमेटी के द्वारा पूर्व राष्ट्रपति जी के सुझाव आए हैं, जरूर इसको आगे
तो
बढ़ाना
सरकार
चाहिए।
कमिटेड है, इसको आगे लेकर जाएगी।
देश के हित में जरूर करना ही है।
एक नेशन वाइड कास्ट सेंसस की भी बात ऑपोजिशन ने बहुत की थी चुनाव के समय में, सरकार का क्या मत है इस पर?
इसमें पहले से हम बोल रहे हैं और बजट के समय में हम उसके साथ चल रहे हैं, हम उसके खिलाफ है। इस विषय से मैं ताल्लुक नहीं रख रही हूँ अभी, सिर्फ इसीलिए मैं बोल रही हूँ बजट के द्वारा, इंटरिम बजट के द्वारा हमने स्पष्ट ये बात बोले 4 ऐसे कास्ट हैं जिसके ऊपर ध्यान देना चाहिए: किसान, गरीब, महिला और युवा। सो इन चारों को हम अगर प्रोत्साहन देंगे, इसमें हर जाति शामिल है। हर जाति को आगे बढ़ाने के लिए इस रास्ते पर चलने में हम उस नज़रिया से डेवलपमेंट को प्रायोरिटी देंगे, ना कि डिविजन बिटवीन वन कास्ट एंड अनदर। इस रास्ते पर माननीय प्रधानमंत्री जी ने वोट ऑन अकाउंट बजट में ही हमने इसका स्पेसिफिकली मेंशन भी किया।
We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry.
Okay, welcome back. There's what 30 minutes to go for the pre-open session to kick off, and we'll sort of look at rates. 26 points, so maybe a little bit of a cool off is what we've seen, but nothing very much else. Amnish Agarwal is with us, head of research at Prabhudas Lilladher. Amnish, good morning. Good to have you with us here. Thank you for your time. Now, yesterday, Amnish, we reported that NTPC Green, which is the renewable arm of NTPC, is in the process of filing papers for an IPO very, very soon. And by the way, they've got big plans. Some 60 gigawatt addition to renewable capacity by 2032, government company, etc., etc. Would you look at NTPC more favorably because of this, because of the value unlocking, which will happen? I'm sure there will be good demand for this. Go on.
Yeah, thanks, Prashant. Good morning. The main thing is that renewables are being tipped as the, you can say, future of the energy. Now, if you look at NTPC in the last 2 to 3 years, the stock has got massively re-rated. It is nearly 4x where it used to trade at, and part of it is also reflected in that people have been factoring in the valuations of the green business. However, I think once the green energy business, which is, you can say, both solar and wind, they got separately listed, I think that company might trade at a premium to where the NTPC is trading today. Obviously, some sort of a value unlocking in NTPC itself can't be ruled out, but I think NTPC Green would be a stock to watch out for, depending upon how they execute and what are their plans for the medium to long.
Okay, all right. Got that. Amnish, by the way, there are some interesting calls on Ola Electric this morning, so I thought I'll bring it up, and we'll have our colleague Vinny give more details. Short point is the 2 foreign brokers, they've initiated buy calls. Ola, remember, has fallen all the way after the major, listing pop, a couple of days after listing, actually. It's fallen all the way to about 103, 104. And now calls are coming in, looking for the stock to head back towards the zone of 140 to 150, in fact, 160. One of the calls is from Bank of America Securities. They've initiated this buy with a target price of 145. And the other is from Goldman Sachs. Their target, again, they're initiating with a buy. Target is 160. And basically, the brokers are saying that there's still a long way to go. There's penetration and costs of EV scooters is coming down. And that should be good for the company. More details on the specifics later. But short point is a very interesting calls coming after the stock has corrected big time from its peak. Amnish, morning. So let's take it up. Ola straight away. It's always a source of great debate in the market. Which side of the debate are you on?
You see, as I said earlier, Ola is a typical concept stock. Okay. If you look at all the new age companies, tech companies, there is always a debate. Now the issue here is that you have entered an industry which has got the strong incumbents like for example, Hero is there, TVS is there, and Bajaj is there. Although they were the late entrants, I think particularly if you look at TVS, if you look at say Hero through Ather Energy or Bajaj, everybody is actually, you can say, vying to take their share of pie. And these guys, they all have got deep pockets. Now Ola, in terms of the economy, in terms of the way they have done backward integration, seems to be well placed here on. But having said that, a lot will depend upon how the new players ramp up in the coming few years, because as of now, the two-wheelers, they are confined more on the scooter side and not on the bike side, and bikes are the predominant part of the entire two-wheeler market. So if you want to go for a tech company, pure tech company, which is into this, and I think Ather now is also looking for an IPO. So there could be some interest around that, but I think it is very catch-22 kind of a situation, because even globally you have seen that when all the incumbents, they try to come in and there is no big technology barrier over there, then I think it is not so easy going for any of these you can say new age companies. But having said that, you compare the market cap of some of the others, you will still feel that there is room for some upside. So I think it is very catch-22 situation for the next at least 6 to 12 months, unless and until you can say the volumes ramp up significantly from where they are today.
Okay, all right. So catch-22 is perhaps Nish's way of describing a stock like Ola at this point in time. Well, that's Ola. By the way, we have a change of guard in the studios with us as well. We have Mangalam joining in. I don't know, you're riding the scooters, Ola, or the jewelers. I know you've got your eye on today's sparkly listing.
Yeah, the sparkly listing today for reasons why. Because one, there was great demand. Secondly, the gold prices are higher. Thirdly, you have all the other jewelry stocks doing well. And fourthly, it was offered attractively as against all the other jewelry companies as well. So, I mean, that's the question for Amnish.
I think the big one is for viewers. I also did not know it, but I realized later that PN Gadgil is a very highly respected jeweler in Maharashtra. So people outside of the state, those who are watching may not know it. Like for example, Senco is big in Kolkata and the eastern part of the country. So these are local jewelers, very big, highly respected from that zone, which now of course are coming. So I think
over the last 12 months or so, if you look at some of the jewelry IPOs, they've all been regional and regionally strong players. So Senco has been, of course, in Bengal mostly, 70-80% of their revenue is coming in from the eastern part. PN Gadgil, you talk about Maharashtra, forget Maharashtra, Pune accounts for 65% of their sales. So extremely, localized, extremely well respected in that local area itself. That gives it a strength, but also its weakness, because how do you expand beyond your core area? You have Moti Sons Jewelers as well, which gets most of its revenues from Jaipur.
Which is where I sometimes get a little,
I think in terms of size, Moti Sons will be very, very small as compared to
It's a lot smaller than PN.
But you know what kind of catches my eyes when you get brokerage reports trying to equate the success of Titan and all the regional jewelers that they need to go the Titan way. That's when I kind of stop a little bit, and it's probably good to ask more questions.
These are the vagaries of the bull market. The only company which so far has shown signs of Titan has obviously been Kalyan because of its expansion beyond its core markets and also into other regions of the country as well. And the stock has been rewarded. The street has rewarded the stock for that as well, 8 times in the last 2 years or so. But this is a question for Amnish himself. Amnish, this month itself, Kalyan is up 22%, Titan is up 4%. Senco up 18%, PC Jewelers up 32% out of nowhere, Moti Sons up 48%, and TBZ, again a local Bombay player, up 62% this month. The gap between the leader and the others is narrowing significantly. Would you bat for the leader right now at these levels, or maybe look at some of these others who are still trading at a discount despite the run?
You see, the situation in jewelry industry is changing. Like you said, that there have been a lot of players from the regional side who have come up. If you recall the history of, you can say, the jewelry listings over the last 10-15 years, why Titan is a Titan today? Because the company has an absolutely clean slate and very, very good track record. We have seen in the past also jewelry companies coming, doing well for let's say 2-3 years, and then they tend to fizzle out, and this has been the history in the past. Because many of these companies, they have raising capital for the first time, the systems and processes are not that strong, and currently what is also happening in many of these players that they are actually their business model we can't compare with Titan. First of all, Titan is a, you can say, it's a much more scaled up player, nearly 40,000 crores of top line. Secondly, it has got strong balance sheet, but it doesn't take any bet on the, you can say, gold price. So that is why in such times, the profitability growth of Titan will be lower than many of these guys. Now, many of these regional and other jewelry players, they are holding a lot of gold inventory. And if you look at last, say, 12 to 15 months, the gold prices are up by nearly 20 to 25%. So that has actually provided them some sort of a cushion, and also it has boosted their profitability. And that is one reason that the prices of many of these, you can say, jewelry companies, they have been on the boil. Now, over the next 3 to 6 months, again, the prices of gold, they are likely to remain firm, mainly because of the central banks buying globally. That is one. And secondly, the expected interest rate cut in the US market. Although if the prices increase incrementally and if you adjust for the duty cut which had happened in India, the prices actually are higher than they were before the duty cut. Now the comparable prices would be, say, roughly close to 78 to 80,000 rupees. Now, if the prices continue going up like this, I don't rule out that a demand at certain point of time, maybe after 2 months, 3 months, it will again languish. But having said that, the way some of the stocks in the jewelry segment are rising, I would be very cautious on this. Yes, Titan is not a stock which will give you 30% or 40% from here on, but for many of the other jewelry stocks also, I think it is time to focus on the balance sheet, on the numbers and the core fundamentals, because some of these profit margins or profitability that might not sustain for long.
All right, Amnish, sort of good to get that. You know, we'll come back to you for more, but we're going to play out some important sound bites. Now, while speaking at the News 18 India event, the finance minister spoke about the IPO and F&O frenzy on Dalal Street. She said there is nothing wrong in investing in F&O, but also added that one must be cautious and trust only authentic information. She's also worried about the GDP growth slowing in the first quarter, expects an acceleration in the coming quarters. Listen in.
We'll have to encourage the markets to be robust, no doubt. But particularly when speculative activities are too much, there needs to have a sense of caution in our minds. We need to have it. And we also need to make sure that people with their savings don't go to engage in high fluctuating or high risk ventures. No harm in participating in F&O, or no harm in going and investing in the equity market. But eventually we need to be using financial information, authentic information, before we take a call. The capital expenditure which was announced, 11 lakh crores, slightly over it, didn't find much of an expenditure happening in the Q1 because every department was probably looking at post-election time. As a result, the large chunk of influence or impact which could have been had because of the public expenditure was muted. And therefore, to that extent, it shows in the Q1 numbers. But subsequently, Q2 and we are in the third quarter, the expenditure will pick up, and that will, I suppose, trigger the little slowing down that you suspect to move faster.
You know, India remains one of the fastest growing economies of the world. Given right now that, you know, there is some soft GDP growth and the inflation is also moderate, do you think there is a case for monetary easing? I'm asking for your view.
Yes, my view being said here will become, Finance Minister expects RBI to bring it down. I don't want to add to that. RBI is doing its full analysis and taking a call. And therefore, I expect them to look at the economy as a whole, both for growth and for inflation.
Okay, so that was the Finance Minister at the News 18 event in conversation with Rahul Joshi. Lots of interesting takeaways coming in from there, including, one more point that I was alluding to earlier, which she kind of, made a veiled reference to, talking about how the interests of smaller retailers need to be protected. And if there is any predatory pricing or deep discounting, then the government needs to look at it. On that point itself, Amnish, just a quick word on Zomato. We're also going to, be looking at the Swiggy IPO very, very soon. Zomato, do you see more upside?
You see, upside can be there, but not the kind we have seen in the last, say, 6 to 10 months. Because clearly now Zomato is a three-horse race. You are having food delivery, then we are having Blinkit, and then is your ticketing business. Now, if you dissect all three, I think in food delivery, I think a lot of the gains they have already accrued. Now, what the markets are betting on is mainly your Blinkit business, where given the kind of food and grocery market in India, there's a lot of scope to grow. And the third is the ticketing business. So I think if the incrementally like what Blinkit has done to Zomato, if ticketing also starts contributing, definitely there could be upside to Zomato. There's absolutely no doubt.
Okay, well, that's the view coming in on Zomato at this point in time. Now, Orchid Pharma is the first company, first management on the show today. The stock has surged more than 100% in 2024. I mean, absolute stunner of a performer from, when the ownership changed back in 2020. Company expects FY25 growth to be moderate and long-term guidance on growth to remain between 20 and 25%. To discuss this and more on new launches, we have Manish Dhanuka, Managing Director at the company, joining in to take some questions. Manish, great to have you with us here. Thanks very much for your time. I just want to start with, the first question, which is your NCE. I'm not attempting to sort of spell out the molecule. I'll probably stumble. But the NCE, which is now well recognized as a big potential growth driver for you, you out-licensed that in the US. You've sort of partnered with a local biggie here in India. And I think it's already selling in Europe. In US, though, which is supposed to be the larger opportunity for that NCE, what is the status? Has the licensing to sell begun? When will sales start? Could you sort of outline that for us?
So as per the last discussion with Allegra, our licensee, they are having advanced discussions with a couple of out licensees. But I don't think that the deal has been closed as of now.
By when do you think? So you tied up with a US pharma company, and they have to in turn sort of tie up with someone to start to sell the product, right? By when will that happen?
The molecule was actually discovered in India by Pharma some 10 years back, and then it was out licensed to Allegra, right? That's a German company, basically backed by some private equity, and they have done all the clinical phase trials, and now they are out licensing across the world. So they have out licensed to Advanced Pharma in Europe, and they have tied up with a couple of companies in the Middle East, still in discussions with people in the US market. We have got the rights to market, commercialize the product in India, and we have tied up with Cipla for a co-marketing.
Correct. So by when do you think this can happen in the US? Could you give us, once it happens, what could be annual revenues from this product? You will collect a royalty out of this. Same question for Europe. What are annual potential revenues from this, and for you, what would it mean? And give us a sense of India as well. Go on.
Yeah, so Orchid is entitled to get 6 to 8% royalty on the worldwide sales that the licenses of Allegra make. With respect to the market size, you see the antibiotics tend to grow slowly because there are definitely multiple molecules available in the market. We feel that the molecule has good potential, and if you look at some of the past history of the antibiotic molecules, they have tended to grow in the later years. Maybe first 2 years would not be so much of a growth, but later on we expect maybe it should be able to touch about $1 billion of sales over the next 10 years. I would say spread out over the next 10 years.
This molecule worldwide, $1 billion of sales.
Well, worldwide over the 10 years, Peter. Over
10 years. Right. Over 10 years, it implies roughly $100 million, $150 million annually. 6 to 8% royalty would mean close to around $6 to $8 million in royalty for players like you. Would that be a correct way of assessing that over the next 10 years? If one has to build a model, $6 to $8 million of annual royalty coming from this?
That would mean after a few years, that's what we expect, yeah. But obviously, how the other molecules play out, because there are other molecules being pitched by companies like Merck and other multinational companies. So it really depends how the medical practitioners view this molecule.
Right. You said after a few years. Could you give us a sense of timeline, say maybe 2 years, 3 years from now? What could the
I think it should
timeline
take
for this?
it should take 4-5 years to reach its high level of sales. Yeah.
And what about India? Street is expecting about 200 crore worth sales from India. When do you reach that?
So we have never highlighted the sales number on this molecule as such. Again, I would go by the potential of the molecule. The molecule has the potential to spare meropenem, which we all understand these days. Everybody knows about antimicrobial resistance, and meropenem being a very important antibiotic for the resistant bacteria. This particular molecule can spare meropenem, where the doctors are prescribing meropenem for the empirical therapy, and this molecule can be used as a first line of the drug, and that will spare meropenem. So that way we feel there's a lot of potential. It has got much better efficacy over the existing first line therapy molecules. So the potential is huge, but again, it depends how the doctors view the overall performance of the product.
Meropenem in India does how much, just roughly, according to you?
So it's difficult to put a number on it, but we do expect to sell 4 lakh injections at least in the first year.
Manish, just one last question, just to get these numbers right. The annual $6 to $8 million will start 4 years from now. You'll get to that run rate in about 4 years from now, right? And then it'll continue for the next 10 years. That's your expectation.
Yes.
Okay. And
based on the history of few molecules over the last 5-7 years. Yeah.
Okay. Now again, since we're talking about projections over a slightly longish time frame, we only talked about this one molecule, but you've got you're trying to build out a branded business and other things as well. What could say 3-4 years down the line, what could revenues for Orchid look like? Taking everything into account, but the other stuff that you're doing as well.
Yeah, so we're expecting about 20% growth in our regular API business. Then besides that, we are setting up a plant for manufacturing 7-ACA, which should go on stream 2 years from now, and that has the potential to generate 400 to 500 crores of revenue once it goes full steam. Then there's a project that we have tied up with Shionogi and GARDP, and we have licensed out their molecule called cefiderocol, which is still under patent, and they have licensed out to Orchid Pharma for manufacturing for the low-income countries. And that molecule would also, the manufacturing facility for that molecule would also be ready sometime in 2026. That molecule also has a potential to generate 150 to 200 crores of revenue.
All right, so 20% revenue growth and EBITDA growth faster, right? 30-35% CAGR is what the brokerages are expecting.
I can't say what the brokerages are expecting, but we do expect 20% growth, and we hope with the 7-ACA and the cefiderocol production, the margins should improve.
All right, Manish, we'll leave it there. We wish you all the luck, and thank you very much for joining us and patiently explaining all of that to us and our viewers. We take a break. We're back. Mitesh and Shilpa Raut will be joining in for some technical trading ideas. So that's coming up. Stay with us.
And we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort.
See, we are a variable rate company. On a asset side, our assets are variable, which are largely linked to a floating rate, which is linked to our cost of funds, and the liabilities are also largely variable. So on a steady state basis through the cycles, mortgage companies generally have a steady state margin. So we do not expect any impact on margins from the listing, whether positive or negative, because that was from a cost of fund perspective, because we had already been a highest rated domestic rated company, and our cost of funds are relatively quite competitive compared to the market. And with a variable rate asset size, the NIMs are likely to remain stable, like in case of all variable asset companies.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparni, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the monthly
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a slightly positive start to open things. So good time to get in a tech check. Mitesh Thakkar and Shilpa Rao, both of them join in now. Mitesh, the index was consolidating yesterday, likely to be in this consolidatory range ahead of the big event. Your thoughts on the frontline indices and individual stocks?
Good morning, Mangalam. So, I've maintained in the last few days that the Bank Nifty will do better than the Nifty, and we saw the Bank Nifty hit our third target of 52,200 to 50 zone. I think we've taken some profits over there, and then there is one more target of 52,600, 700 pending over there. That range could be tested. But now the intraday charts are again getting close to overbought level, so I'll be slightly cautious. On the Nifty, maintaining a target of 25,500, and on the Bank Nifty, I would suggest take some profits and then hold the balance with trade stop for targets of 52,600.
Okay, all right, got that, Mitesh. Let's welcome in Shilpa as well. Shilpa, good morning. What's the index call? What trades are you going with today?
Good morning, Surabhi, and thank you for having me on the show. Talking about indices, we see that Nifty actually has met the targets of 25,500, almost there, and now still holding these gains. I believe the stock is the index is still well poised to test 25,800 in coming sessions. Of course, a consolidation can happen, but as long as we are holding 25,000 mark, I believe that we are good to see those higher levels. Talking about Bank Nifty has given a good breakout, sustaining above 52,000 right now means that we are heading for higher levels of 53,000 to 53,500 in coming sessions.
All right, Mitesh, your stocks for the day? Oh, all right, we'll take a short break, come back. On the other side, we'll get all the stock picks from both Mitesh and Shilpa. Also, we'll get the pre-opening, and with us will be Aditya Velkar, who's the Senior Research Analyst at Axis Securities, to talk about the metal space and also focus on the dam breach at Vedanta's refinery.
Have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June, and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars, and come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
the market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market it has been smooth as a highway. Now that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57. But the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now, according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now, this list includes IPOs that were open for subscription but have not listed yet as well. Now, September traditionally has been a good month for IPOs, and the 7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month.
Okay, well, just pointing out that as we start getting our pre-open rates, the implied open is still looking good. Some of the markets, the larger markets in Asia that are trading, Japan in particular, is really weak. The Nikkei is now down 2%, and the chatter continues to be around the yen, which is now quoting at a level of 140 to the dollar. So that strengthening story on the yen simply keeps continuing. It fell below the 140 level as well in in earlier trade, but right now it's around that mark, so that remains a big headline across Asia right now. Let's go back and get some more stock-specific trading ideas from our technical experts as well. We have Mitesh and Shilpa still with us. Mitesh, so individual stocks, what are you going with today?
Morning, Surbi. Marico is something which I've recommended a lot, and I think today also makes on the list. It's a buy with a stop at 686 for targets of 720. Crompton is a buy. It's come down with the correction now at support levels, so buy here with a stop below 441 for targets of 460. A buy on Motherson with a stop at 190 half for a target of around 200, and also a buy on IGL with a buy here with a stop at 519 for a first target of 550.
Shilpa, your stocks?
I would have buys in Tata Consumer. Tata Consumer is holding well above 1200 and the upside targets is very well placed at 1250. So a stop loss of 1195 should do the trick, and you can look for targets of 1250 to 1270. The other one would be a buy in UBL. UBL, a stop loss of 2090. Look for targets of 2170. And the third one would be a buy in Shriram Finance. Shriram Finance also gave a decisive breakout yesterday. A stop loss of 3380 from here. Look for targets of 3475 to 3500 cents.
Right. Mitesh, Shilpa, thanks for that. Just a few more names I want to get your quick sort of thoughts. BSE was a big mover yesterday. I don't know if the pre-open has kicked off and you'll get the rates in BSE. MCX is the other one, which went up 6-7%. How do these two look, Mitesh?
So, Prashant, my understanding is that maybe that news of NSE IPO is kind of fueling, some kind of moment over here. But technically speaking, the gap breakout on BSE chart was very positive. Now, yesterday itself, it moved about 18%. So while we have higher targets, I don't know whether it can be a fresh entry right now. But let's say if it gives a pullback around 3300, 3270 zone, that's the area to buy. And I would look at targets in excess of 3750 or thereabouts for the chart of BSE. MCX similarly also had a good breakout, fresh swing high. But here I would, be not very keen to buy into the stock immediately. Again, while it's overbought, it's also, somewhere not showing the momentum expansion which BSE showing. So between the two, I would still choose a BSE, but on mild declines.
What about I don't know if you have existing calls from earlier. Global Spirits, GM Breweries, that's that part. A lot of momentum there. The Alcobev names. And these two went up sharply yesterday. And maybe a quick one on Dixon as well, which went up 7%. So new highs there.
Yeah. So I start with GM Breweries. That's a stock I've been tracking for some time. I think a good, I would say a top formation kind of a breakout on the upside suggests that as long as the stock is above 900, 910 levels, we should be looking at much higher levels of around 1070 to begin with as the first target, but logically maybe about 1150. So very positive on GM Breweries. Coming to Global Spirits, I think that's a stock which is showing good pattern on the long-term charts, and the earlier monthly highs in 2022 were around 1535, 1540 levels. So that's my target over there. So I still believe there's good upside left. Dixon is something, again, Prashant, has been doing extremely well. A fresh high and, fresh breakout over there. This stock possibly could scale highs of around 14,700 to about 15,000 levels, but looks very overbought to me. The momentum is still on the upside, so maybe I would want to trade the stock via call options or maybe a buy on a decline. But right now, fresh futures entry might be slightly risky from a risk reward point of view.
Okay, all right. Those are some stocks in focus. By the way, watch out for First Source as well. We were mentioning that in the opening commentary itself, that First Source, in the moment the word AI, comes in the picture, and here it's Microsoft, also OpenAI, the market gets excited. There's a tie-up. We don't know the commercial sort of consideration involved, but there is a tie-up with Microsoft that the company's entered into, and the market's quite excited about that.
That phase of technology, right? Every time, back in the day, you had software, so companies would name themselves after some software or the other.
Yeah.
Then you had the platform boom, where companies named themselves after platforms. They kept calling themselves a platform company, and now it's artificial intelligence. Won't be surprised to see a lot of these, tech companies, a lot of mid-cap tech companies
add an AI suffix.
Change their name and add an AI suffix as well. But let's move on to old economy. Vedanta was in focus in yesterday's trading session. There was a breach of its process water storage pond at its Lanjigarh alumina refinery in Odisha. The companies said that the situation is fully under control and there are no disruptions in the current operation. So to discuss this and more on the metal sector on the whole, we do have Aditya Velikar, who is the senior research analyst at Axis Securities, joining us. So Aditya, first up on Vedanta itself, yesterday when the news came by, the stock was doing well. Thereafter saw a bit of a sell-off on worries that this may escalate. But now there has been some sort of clarification coming in from the company. Things not to worry right now, but you never know what happens, right? So from that standpoint, how are you looking at Vedanta in particular?
Yeah, good morning. So the clarification from the management is a kind of relief, I will say. But we will still follow the story and we'll see if there are any one-time expenses if the company has to take in future. But so far we will go with what management has said, and there has been no damages and no breaches, so that's a relief as of now.
How much does it account for in your overall scheme of things for Vedanta?
Fundamentally, the stock is having a good amount of unfolding of story to take place. So they are integrating their aluminium division, their raw material for bauxite, coal, and alumina expansion is happening. So the aluminium cost of production is expected to go down from current $1,700 per ton, and they have an aspiration to bring it down to $1,550 per ton. And they are increasing their aluminium production from 2.4 to 3 million ton, and for that they will be integrating their alumina. Currently they are consuming, the captive consumption is 40%, so that will increase to 100%. The coal will also get fully integrated to 100%, and bauxite sourcing will also, the bauxite imports will also come down from 50% currently to 7%. So all this story will unfold by FY 27-28. So that amount of tailwind, and further the demerger which will happen. So all these tailwinds are still in the stock, and aluminium will be one of the biggest divisions of the company going forward. And for aluminium, we see the fundamentals are still in place. The Fed rate cuts, then the alumina prices are quite high, so that is providing support to aluminium prices. So aluminium prices are now trading in the about $2,500 per ton. So overall, in the long term also, aluminium as a metal has a good amount of tailwind provided by these renewable theme, the electric vehicle and all those things. So as compared to steel, aluminium is a good place to be invested in, and Vedanta offers that kind of opportunity in the long term.
Okay, Aditya, we don't want to be speculative here, but just to, get a handle on this, you said right now captive sourcing of alumina is 40%, right?
Yes.
From Lanjigarh. Now, for whatever reason, just in case, if for whatever reason this escalates and there is any kind of a temporary stoppage at this facility, just trying to understand, what would it take to source alumina, additional alumina from the external market? How is pricing playing out, and what could be the possible hit? Just worst case scenario.
Yeah, so currently alumina prices in the external market, they are trading at a very high level. The spot alumina prices are in the range of $570 per ton. So this is due to the supply shortage due to several reasons. One of these is the supply dearth from Rio Tinto, and then some domestic bauxite issues in China. So alumina prices are at a higher level. So if they have to source more alumina externally, then that will put some amount of pressure on their cost of production of aluminium.
You're positive on the stock? What's your target price?
So currently we have it under our soft coverage, so target price I can't give. But we are, as I said, we are structurally positive and aluminium as a theme, and for Vedanta in particular, because this aluminium total raw material integration story is yet to play out. Further, they have more tailwinds like demerger is yet to play out. Then they are expanding their zinc power business. So multiple triggers are there.
All right, you said that you are more positive on aluminum than all the other metals, but let's get in a word on all the other metal stocks as well. Steel in particular, what are your thoughts on, say, JSW Steel, Tata Steel, all the other steel players? What is your call? And we have the US FOMC meet outcome as well. If there is a decline in dollar index and a decline in US rates, typically that is positive commodities. So to that extent, what's your call on the sector and top picks?
Yeah, so that FOMC Fed meet will have more positive impact on base metals, particularly for aluminium, copper, zinc and lead. For steel, the impact is slightly getting negated because of the slow demand in China. There are no signs of any stimulus coming out from China. As well, the numbers which are coming out from Chinese economy, they are not very encouraging. So the steel intensity is definitely not picking up. But as we come out of the monsoon and we enter this autumn season in China, and these Chinese New Year holidays are kicking in from the first week of October. So there might be some restocking in iron ore and steel. So we have to keep a track of it. But structurally, steel as a story, it needs a support from construction property sector, and which is which is not doing well in China so far. So, and the policy narrative in China is not in favor of giving stimulus to property sector. So the demand is coming from machinery and infrastructure, but that is not fully enough to compensate for the loss in demand from the construction activity. So we prefer non-ferrous stocks like Hindalco, Vedanta over steel stocks. Within the steel stocks, we prefer the non-integrated players like JSPL and JSW. We have a hold rating on Tata Steel and SAIL. These stocks, they have multiple headwinds, mainly because of these fall in the steel prices. Further, Tata Steel, they have a long restructuring activity to undertake in UK. SAIL has a long capex announcement, and they are increasing their production capacity. But their history of capex execution is not so great. So, in the backdrop of the falling in the subdued steel prices, we prefer JSPL and JSW. And as I said, in non-ferrous, we prefer Hindalco and Vedanta.
Hindalco, Vedanta, JSW and JSPL. Thank you so much, Aditya, for joining in and giving us your views on the entire space. We take your leave on that note. And speaking of one commodity, let's move on to the other one. And this is with regards to gas and City Gas Distribution Company. Sonal joins in with a UBS note and what it's saying. Sonal.
Well, yes, UBS is very bullish on IGL and MGL. They have increased target prices on both these names. Let's start with IGL, where they have upgraded the stock to a buy from a sell. The target price has been increased to 700 versus 400 rupees a share. They are talking about inorganic growth opportunities for the stock and the company as well, which have not been priced in yet. They expect volume growth to improve from about 4% on a YOY basis to 8.2% in terms of CAGR over the next 3 fiscal years, and infrastructure expansion and the new geographies that the company is tapping in outside NCR is something which will aid volumes. Potential M&A opportunities, as I said earlier, according to UBS, is not priced in the stock price. For MGL, they've increased the target massively as well to 2,400 versus 1,600 rupees a share right now. The volume trajectory could continue to surprise positively. They made an acquisition, and that is something which will start aiding in volumes going forward. They've raised FY 25-27 volume expectations by 7 to 11%, EBITDA per SCM expectations by 6 to 11%, and they also say they're factoring in the potential M&A opportunities. So they're quite positive on both these stocks when it comes to expansion, the inorganic opportunities, and volume growth from here on.
All right, Sonal, thank you very much for that. Well, Ola Electric is the next one because there are two brokers who've initiated coverage and with a positive view. Vinny is here with details. Vinny, morning.
So yes, surely positive view coming in for Ola Electric from BofA as well as from Goldman Sachs. Now, BofA, they've initiated a buy call, target price of 145 rupees per share. they believe that obviously Ola is among the highest in terms of market share. That the player in an electric two-wheeler has around 40% market share. Other than that, the benefits that BofA is highlighting that the company has been focusing a lot more in terms of expansion of its product profile, as well as in terms of they found the key pieces where there's a gap between in the EV puzzle. So that's what they want to focus on, and forecasting around an 18% penetration rate by FY25 for electric two-wheeler. That's going to be interesting to watch out for, and 25% by FY30. Moving on to Goldman Sachs report, they too buy call target price of 160 rupees per share. They believe that the company is structured quite well for long-term synergies from the electric two-wheeler market, because that's seeing a good improvement and a good trend in the Indian market. So domestic is something that will work out well in terms for Ola Electric. Other than that, overall, they're expecting a revenue growth of around 30% over the next 5 years for the company, and they are implying a free cash flow break-even at around in FY30 for the company. Valuations also versus Tesla, which is a global player, is at around similar levels, while with two-wheeler players, it's much lesser, so keeping an eye on that.
All right, Ola Electric in the pre-open is indicating a 5% higher start. Vinny, thanks very much for that. But there is, of course, Ola and all the other names that we highlighted with their research team earlier as well. So just market open first rate. So we'll do the indices and go into stocks. So 25,394, 395 is where the Nifty is starting, which is almost unchanged. Sensex is, actually blinking fifth between green and red. So 83,000, 82,998. So that kind of open. We've got nothing on the Nifty Bank as well. 45 points, so 0.09%, 52,200 on the Nifty Bank. So very, very quiet. We've got the IT index, which is coming up with about a 0.25% cut. So 43,254 is where we are at. Market breadth is positive. So almost some 3:1 in favor of advances, but it's kind of early. The heat map on the Nifty in terms of number of stocks which are opening up and opening down, it's actually almost evenly balanced. So I think about 20 names should be down and maybe a little bit more earlier. And about 30 of them are opening in the green. So that's the Nifty heat map. So 2-point grand change on the Nifty within the first minute of market open.
Okay, well, let's look at some stocks which are active. Look at Bajaj Housing Finance on the go once again. There's a 9% pop on that stock. If I remember correctly, it's Phillip Capital. They've issued a positive note, and their target price is northwards of 200 on that stock. And it's inching towards that mark. 9%, that's a big move on Bajaj Housing. Ola Electric, the stock we were just discussing, up about 4%. And the gas companies, city gas companies, IGL and MGL, reacting really well to some of the brokerage notes that have come in, which are quite favorable. Anyway, on the Nifty, it's very quiet, just about 7 points lower now. It's a flip-flop on the FMCG space. One day up, one day down. Today's one day up. Tata Consumer, Britannia, Lever, these are some of the stocks on the upside. There's a little bit of buying on some of the other heavyweights like an Axis Bank. ICICI Bank and HDFC Bank are sitting on the fence. There's no clear move as yet on the banking pack. The Nifty Bank is also fairly flat at this point in time. Hindalco is managing some green, but let's look at the red side of the screen as well. Profit taking on Tata Motors continues, 2.5% down on that stock. Wipro, Maruti, these are other names on the way down. SBI and TCS are two heavyweights, Counted and Infosys as well. So some of the IT big boys starting lower, along with the State Bank of India. Basically, it's a net neutral on the Nifty with the downside bias 15 points lower.
Downside bias indeed, and you can see that increasing number of stocks declining in the broader markets as well. When we started, we had about 300 stocks declining. Now that number has quickly doubled to around 1,000, tripled, doubled to 600, and now as we speak, the advanced decline lines are split right down the middle, equal number of stocks advancing and declining. Bajaj Housing Finance has now hit that 10% temporary freeze, so we'll keep an eye out on that one as well. Interestingly, a lot on the street were hoping for some sort of valuation catch-up in other housing finance companies too. That hasn't happened. It looks like there is still some soft moves that we're seeing on names like PNB Housing Finance. LIC Housing Finance has entered F&O ban. We'll keep an eye out on that one too. Global Spirits, the street likes their entering the luxury segment with a new craft whiskey. Craft whiskey made by India is something that has been a big mega trend, and that's led to a big move in a lot of these alcohol stocks in India itself, Radico, Khaitan, Piccadilly Agro, etc. And as a result of which, Global Spirits being rewarded for the same. On the way down, we have a bunch of stocks which are actually lower. Tirupati Balaji Agro, another recent listing, has been down 5%. TBZ, all the local jewelry companies seeing some bit of profit taking. So TBZ is down 5%, a lower circuit after a big move this month itself, up 54% this month, including the 5% cut that we're seeing today. Godfrey Phillips seeing some bit of profit taking as well. On the way up, of course, you did point out the city gas distribution companies. They've extended their gains. IGL is up around 5.5% right now. MGL up around 4%. Gujarat Gas seeing some traction as well, though not strictly a city gas distribution company. First Source is the other one. Opened with a gain, holding with a gain, but still off high. So about 2% up move is what we're seeing on the partnership that they've announced with OpenAI, the contours of which we still do not.
That explains the move in Tata Motors. It is the weakest stock on the Nifty right now. There is a large block, 0.4% equity moving around. And the sector of the morning, shouldn't actually say morning, but you pointed this out, Mangalam. So Alcobev, it's not only Globus. Piccadilly itself is up 5%. Radico is still continuing its move from yesterday, up about 1.5%. A little small tinge of green on the United Spirits as well. So these are some stocks on the way up. But otherwise, Prashant, very quiet on the market. Even the mid-cap index right now, absolutely unchanged.
Quiet in markets and noise in the streets.
Yeah.
So yeah, absolutely. It's not very much going on, at least at the index level. Maybe a few other names, and we'll bring in our guest. So I'll start with what else is happening. Actually, market breadth has moved to being almost exactly equal, 1:1, with about 5 minutes of market open behind us now. Bajaj Housing is limit up 10%. 181 on Bajaj Housing Finance. Ola is close behind with a 4% pop, but large volumes in it. I think IGL, MGL, First Source, all these we mentioned. We've got, Aarti surfactants 8.5%, 832 or so. That's a big move on Aarti coming through, and backed by volumes as well. There is Ecos Mobility, which is showing up with a 2% gain. Kohinoor Foods is up 10%, 11%, 52 on Kohinoor Foods. Panacea Biotech is up about 5%. So it goes. I mean, essentially, a few of these names. India Shelter is up about 1%. Remember yesterday, PNB Housing, LIC Housing, India Shelter, all of these, and there was a very large block which happened yesterday on India Shelter as well. So all of them sold off very aggressively. They're down about 7-8%, and we'll have them up as well. On the downside, there's Godfrey Phillips, which is down 5%. It's the second largest volume-led loser on the NSE. And of course, Edelweiss, which has had a one-way move, is pulling back about just 1%, nothing, 128, 129 on Edelweiss. TBZ, Tribhuvan Zaveri, which has had a rocket-like a move, 4.5% lower. So these are just pullbacks. Lodha is down about 2.33%. Tollens, which is basically the tire maker from the listing from yesterday, that is down about 4%. It's had a pretty subdued flat listing yesterday, and this is day 2. Root Mobile, Triveni Turbine are some of the other names which are coming up with some rates, but not very much really in terms of price action. Quieter. Karthik Kumar is fund manager at Axis Mutual Fund, is with us to sort of take some questions. Karthik, great to have you with us here. Thanks for your time. The big debate, of course, is how does one sort of navigate the start of the easing cycle and the easing cycle itself, because it's going to be Fed and then maybe others will follow. They're not exactly synchronized, but that's the general expectation into the end of the year. Some, depending on who you ask, between 75 to 125 basis points worth of rate cuts. So at Axis and you and your team, how are you sort of viewing this and implications for markets here in India?
I think with rate cuts, obviously, we already seeing sector rotation on a much more frequent basis than we did see before. Part of it, I guess we could attribute it to uncertainty coming from macroeconomic policies in the West. But at the end of the day, we are, as a house, we are much more focused on ideas and on looking at themes here that are much more specific and positioned accordingly. But what you're seeing in the markets is essentially over the last couple of months is it's been consistent in the sense that the breadth of the market, or rather the spread, like the case today, where the outperformance of mid-cap and small cap to large caps have narrowed compared to what it was the case, what was the case previously, and also sector leaderships and from strictly speaking from a quantitative frameworks, style leaderships have also evolved over the last 3 months. So we are positioned accordingly to that, and more from a bottom-up perspective and less so from a top-down angle.
Okay. Yeah, so sector rotation and some change in leadership. That's we're beginning to see some signs of that, Karthik. Good to have you on the show, by the way. Good morning. So to be here. So, the basic question that came to mind yesterday after looking at the Bajaj Housing Finance listing is, is the market still willing to pay top dollar and digest those kind of levels for stocks where there could be promise? What is your sense? I mean, for a housing finance franchise, would you be willing to pay, 6 times, 7 times? Are we back in that zone?
It seems like, based on what the data we've anecdotally seen, we are back in that zone. But essentially, if you look at what's been working over the last 2 or 3 months, as you rightly pointed out, we are seeing sector rotation. And the other thing we are seeing is a switch back to quality, where the market's focusing back on some of these low beta names as a theme, or even looking back at stocks and sectors where your ROEs are structurally much better. And so the focus has come back to a bit more quality over the last 2 to 3 months, whereas your styles that were leading previously, which was growth and valuations, have kind of taken a backseat for now. And that is evident even when you look at it from a sector perspective, where be it FMCG or pharma or IT, those sectors have kind of done well over the last 3-4 months, whereas the leaders from the prior 3 months or 6 months have kind of taken a halt here.
Well, you spoke about quality, and we are seeing a bunch of stocks doing well, as the hotboard on the screen also suggests. Yeah, the only sector which is seeing the most amount of gains right now is FMCG. Was under pressure in yesterday's trading session, routine profit taking, one may say. I just wanted your thoughts on this quality versus all the others battle itself in the market right now, because while quality did not see a multiple re-rating, it was already at premium valuations. The others started to rally, and as a result of which the valuation differential got narrowed. To that extent, does it make quality attractive largely from a valuation standpoint, or more is it more of capital protection that you're looking at, given the sort of up move that we've seen in a lot of places?
I mean, you're absolutely spot on in the sense that quality was expensive a couple of years ago. Just to put this in context, quality has had a rough ride for almost year and a half now. So to that extent, the other styles or the other areas of the market have caught up in terms of valuation. And quality, given its nature, will always trade at, I would argue, would always trade at a premium to general markets. So the larger theme in the market has also been catch-up, whether be it at a stock level, sector level, or at a style level. So you could attribute it to focus on capital, or you could attribute it to general nature of the markets, to focus on areas of the market that have kind of lagged the headline numbers, and so which is where the focus has come back to quality. And the fact that the valuation spreads have narrowed has kind of helps reinforce that case. But as I said, the quality as a basket would always trade at a premium to markets, in my opinion. That is unlikely to change.
So, what are your top sector picks right now?
Right now, I'm bullish consumer staples. I'm overweight healthcare and discretionary, whereas I continue to remain underweight energy, commodity plays, and IT.
All right. Karthik, on IT, would the view change a little bit at the margin at all because of the rate cycle? Most IT companies, when we speak to them post results, not actually most, but many, and I'm talking about larger ones, they do flag off this higher rates in the US as a bit of a problem to be able to tap into new business, and how. So I'm assuming that if the rates start to come off, I mean, the business should at least the margin incrementally pick up. Wouldn't that reflect for you as an investor as well?
So on the margins, I've kind of reduced my underweight positioning in IT. But having said that, if you look at the earnings profile or the expected growth rate over the last 2 years, or over the next 2 years, I mean, the fact that we are going to be in an interest rate cut cycle is a certainty. It's just the timing and the pace at which we are going to go through it remains is debated. But the event itself is kind of all but confirmed, right? So to that extent, despite that, what we are not seeing is a broad-based improvement in earnings indicators so far across IT. Selectively, you do see it in stocks, but not across sectors in a broad-based way. Which is why, while I've reduced on the margins, I've reduced my underweight to IT, but that is more coming from stock-specific picks rather than a sector-based one.
In terms of this market, again, this is because rates are starting to come off. What does it mean for smaller businesses? Do smaller rates mean at the margin are much more positive for smaller businesses to be able to access funds, and it means a lot more, right? Larger entities can access funds anywhere. So for the small and mid-cap universe, as we go into the next, say, 6 months, 8 months, what does this mean?
I think it also depends on under what economic context are we talking about in terms of the rates coming down. If it's a soft landing, then it could mean all that you said for all things positive for mid caps and small caps. But if we get into a kind of an economic, if we have economic headwinds and the interest rate cuts are happening in that scenario, then one could argue, at least from a portfolio positioning and from a stock positioning, probably large caps would be a better place to look at rather than mid caps and small caps. So instead of looking at just, I would prefer, instead of looking at just interest rates in a silo, we also look at in what context are we talking about, and are we talking about a soft landing, or are we talking about something slightly more negative?
All right, take your point. Thank you so much for stopping by and giving us your sectoral calls, your view on the market on the whole, positive on consumers, staples, prefer large caps over mid caps and small caps. Keep an eye out on that. In fact, the next discussion that we've lined up would be a theme of your interest itself. It's got to do with the consumer staples, and all of them actually doing well. We have Britannia, HUL, Tata Consumer among the top Nifty gainers right now. The other one that we're talking about is Patanjali Foods. In focus, as the government has increased basic import duty on edible oils by 20%. A sentiment negative for the sector, but is it really so? We have Sanjeev Asthana, CEO of Patanjali Foods, with us in the studio. Thank you, Sanjeev, for joining us in the studio. We've been talking distantly for a while right now, but this is a topic that needs to be addressed, right? 20% increase in import duty for refined oils and refined edible oils, etc. Just your thoughts on one, after this increase, what does it take your basic procurement price to, and would that have any impact on margin? Would you be able to pass it on?
No, so there are two parts. One is that this was a very critical requirement which the government has fulfilled. Two bits which were impacting it. One was that the oilseed prices were running way below the minimum support price declared by the government. And this was causing enormous amount of stress to the farmers of soybeans and mustard. So government had to do. And second is the differential between the crude oil and the refined oil was very minimal, which was hurting the industry as well. So in terms of the step taken by the government is very timely, and I think it's a very welcome step for the industry. The issue which still needs to be resolved is the differential between the crude oil prices and the refined oil prices, which is basically supporting the overseas refiners, which can continue to sort of find homes into India, and Indian refineries will have to struggle to really make the margins meet. So there's a one-time inventory gain, which will be offset by part of the gains because the advanced sales what have been done to buy a higher sort of priced oil.
What happens to players like you? Because you are, I presume, importing a lot of these as well. With the import duty having increased 20%, does your cost of procurement of these products increases, and could we see an impact on your margin?
No, it does. I think there are two sides. So one is, as I mentioned, there's a one-time sort of, some value, the profitability which will increase. The larger issue here is that, for the sector itself is positive. For the oilseeds as a sector which is going to be on the growth path, this is positive. And the third piece is that, calibrating the prices to reach the levels at what's internationally are required. So that's very important. So I would say that overall a very positive step.
Just another word on the oil import duty and the impact. I remember earlier conversations a couple of months back where you yourself are getting into, palm oil cultivation in a very big way, right? So what is the target? I mean, how much would you want it to be captive? What is it right now? And what are the timelines on the whole project?
No, so currently we have got about 75,000 hectares which is under cultivation, of which nearly 70% is already yielded. So we make a serious amount of money. It's almost an assured EBITDA margin of between 16 and 18% that we get. We are targeting 500,000 hectares over 5 years. The target geographies being south of India, Andhra, Telangana, Karnataka, and the northeastern part of the country. So it's a large project, very positive in terms of the future sort of EBITDA addition that we can make to the business. And it's almost like an annuity gains that we'll be able to do that.
And how much of your own demand or requirement is being met through your own cultivation?
So today we do about 10% of what we do. So we produce about 110,000 tons of crude palm oil from that. This, in fullness of time, when we do entire 500,000 hectares, will go to close to about 500,000 hectares, 500,000 tons. And this will be about 60% of what we require, because by that time our imports will also continue to increase. So very positive, as a project that we're taking, and of course very helpful for the country as well in terms of reducing the dependency on imports.
So with all things being positive, the question that one begets asking is, why is it that the promoters sold about 3% stake in the company a couple of days ago? GQG bought that stake. They already held about 3% stake. So what's the plan with GQG? Are they looking to buy more stake? And the promoter stake selling?
So I think there are two sides. One is that the global investors have reposed a lot of faith. And this validation of what we just did, the block deal, the promoters did, it is very positive in terms of the global market investors have tended to repose a lot of faith in the Indian consumer story, Patanjali in particular. So that's something that we feel very happy about. Longer term plan is that we will continue to sort of build a stronger sort of platform. Integration of HPC business shouldn't take too much of time. I think we're just waiting final regulatory approval. This should happen pretty much within this month. And from the next quarter, we'll start inducting the HPC business into the fold of the company. So very positive for the company, good for the promoters, and I would imagine very good for the sector as well. That's a lot more.
Will they sell more?
Yeah, you didn't answer the question. If you had any conversation on why they sold, I mean, it's 2.7%, not too much stake sale. I guess even after the stake sale, the level is 70% promoter holding. But was there any conversation?
No, of course. There's I think largely the very clear cut that promoters have largely divested all their profit-making businesses into this entity, the listed entity. They need to clear their own debts, and it's a very logical way. So, the source of income to pay off the debt, I think this is one way to do that.
What is the debt on their books right now, and does it get cleared with this 3% stake sale?
So most of it will get cleared. There's a partial sort of debt which will remain. That will continue that. So there are no timelines. There's no plan to kind of divest any further equity.
Mr. Asthana, would you look at demerging? When will you look at demerging the oil and the non-oil businesses within the fold? Your fold.
So this question gets asked very frequently. So our plan is not to demerge at all. So these are very good businesses. So for example, palm oil is extremely vertically integrated, which integrates itself into the branded side of the business. So there's no such sort of plan on the cards right now, and we will build up a strong company, which is diversified.
When will come to you, how it will be value accretion and this and I mean all of this. The essential point is one is a very low margin business, the other is a much higher margin business, and that's where the argument stems from.
No, you're right. I think this gets discussed very often, and I think this is something that we've thought this over. And the belief is right now that demerging anything would not be a sensible step for the company to take.
That's as of now?
Not as of now, for the future as well.
So no plans at all?
None at all. None at all.
Yeah.
None at all. It's not on the table.
How is the non-oil business doing? Could you give us a real sense across segments for you?
So non-oil business is very strong. Last year we did almost 10,000 crores of revenue, which is 30% of the company's overall revenue. Target is to, over next 5 years, to take it to 50-50 between the edible oils and go to the double-digit EBITDA and perhaps do better. HPC portfolio will add a lot of heft to what we offer, and all the categories are going fairly strong. So foods, the FMCG side is going at 10%. HPC, the target is that we'll go at 15%. The edible oil category is going at between 3 to 4%, which is where we wanted to stay as well. And so overall, we are feeling pretty positive. So on all the parameters, in terms of return on equity, the overall absolute profits that we are able to generate, return for the stakeholders, the overall aggregation. It's a good story.
So tell us one thing. I mean, you did in FY24, you did revenues of just under 32,000 crores. Margins ballpark around 5%. You're talking about all these other engines firing up, HPC, building margins over there, the plantation business being more accretive for the EBITDA. So FY25 and more importantly, say FY26, once the integration is done, what are we talking about in terms of top line growth and lifting the margin profile itself of the listed blended entity Patanjali Foods?
Our target is to keep adding 1 percentage point to 1.5% every year financially to go towards 10% double-digit EBITDA. So the story, the sort of the trend line that we want to make sure that we get closer to 6.5% next year and continue pushing thereafter. And we feel pretty confident with the FMCG businesses doing well. Oil from the last 5 quarters of sort of disturbed situation. Last 2 quarters we've seen a positive sort of play. Markets have stabilized. So overall, we feel pretty confident of the projection.
So 6.5% this year, right, on the margin?
This year we'll have a lesser sort of window available now with the HPC business coming in. So, but we'll certainly add to the EBITDA of last year for sure.
And just a here and now question itself. You said by the end of this month the HPC business comes in. So this year 1,500 crore in terms of top line from that HPC business on the cards. Can one look at it? Because last year you were close to 2,800 crores. Assuming you're doing 3,000 crores, half of the year comes in. That's not out of whack, right? That expectation.
So that should be pretty much on the cards. Yeah.
And about the oil business itself, it's now on a favorable cycle for you. Last quarter you did closer to 200 crore EBITDA. So 200 crore EBIT. 250 crore EBIT for the next few quarters. That's on the cards as well.
It should be very much feasible. Yes.
All
That's
right.
very likely.
And promoters do not pare their stake beyond that 65% mark for the near future.
69% mark.
69% mark. We get that. Thank you so much for joining us in our studio and giving us an outlook on the business, the promoters' plans, and the way forward for your oil and non-oil businesses as well. A pleasure speaking with you. So that was the management of Patanjali Foods indicating that they will increase their margins by about 100 to 150 basis points annually. This year, 1,500 crore revenue from the HPC business. For the next few quarters, 250 crores in terms of operating profit coming in from their oil business as well. Promoters not looking to sell their stake beyond that 69% right now. Take a short break. On the other side, we have another conversation lined up for you. This one with the CEO of Dr. Lal Pathways.
Now 5 of these issues have returned 100% and more from their IPO price. Now 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now unlike 2021 and 2022, there have been no giant-sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now 45 IPOs this year have delivered positive returns to shareholders. Now among them, Jyoti CNC is the top performer with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention considering the strong moves they have seen just a few days after they listed. Now among the few IPOs that have delivered negative returns so far include Capital Small Finance.
Welcome back. Well, it's a very, very quiet day on the street as far as the indices are concerned. Not much changing on the Nifty, the Bank Nifty, or even the mid-cap index. It's that kind of a morning airpiece for now. So we've got our eye on individual companies and stocks. So let's keep it with the corporate conversations. Dr. Lal Pathways is now in focus. The stock has gained about 30% in the calendar year so far. The company says there are no plans to take any price hikes in FY25. Revenue growth is expected to be above 10%. To talk about the business outlook and the way forward, we have Shashank Banerjee, CEO of Dr. Lal Pathways, joining in. Mr. Banerjee, good to have you on. Thanks for being with us. First things first, want to talk about business for sure, but now this whole monkeypox threat, I mean, we keep hearing about this as well and the new guidelines that are kicking in. First and foremost, I mean, is there anything that you're noticing? And I don't know if the testing is right now open to a lot of the private labs like Dr. Lal. Just tell us the latest on this.
Yeah, good morning. I think yes, monkeypox is something which is in the news of late, and everybody has their eyes on it. As of now, testing is restricted to government institutions only, and I think as and when, and I think the government has said also quite clearly that right now there isn't enough cases, etc., to really worry about it. But I'm sure that if there is something like that, they would open up to private diagnostic companies later. But that is completely dependent upon how the government looks at that. So as of now, we are also watching it on the news and keeping a track of it.
Sure, fair enough. So yeah, let's just hope the situation remains under control. Having said that, let's get back to business and what you've outlined so far for the year, this idea of about 10% growth. Tell us what is driving the business as of now, which segments, and also why only 10%? Now that we're almost done with the second quarter, do you get the confidence that growth levels could be better than this?
So, we had put a bit of context on growth for FY25 specifically. I think FY24, we ended the year at about 10.4% growth. And a part of that growth was also, driven through a price increase that we had taken in February of the year before. So close to about 3.5% of that 10.4% actually came through a price increase. So what we have stated, for the year FY25, we want to do slightly better than what we did, 10.4%, but without having to take a price increase. And that's what, we are all working on. And that is kind of, giving the confidence back into the system that, the kind of underlying business growth can become robust. So that is really what we are trying to work on. I think what we also saw last year was that, there was this whole overhang of COVID and, non-COVID tests related to COVID. So there was quite a lot of, base fluctuations that we have seen. So I think we really need to see a few stable quarters and one maybe financial year before we can start looking at maybe, future projections beyond that level.
Okay. Mr. Banerjee, hi, good morning. Prashant here.
Good morning.
So, we spoke with you exactly a month ago, and at that point you said that you do better than 11% without a price increase. So we look forward to that. Maybe, once this quarter is done and you've reported numbers, you'll up the guidance in that sense. Could you tell us how's Swasthfit been doing? Because that's been the big driver. Bundle testing forms about 24% of your top line. Just give us a sense of whether momentum is strong there. What else are you doing in terms of product initiatives?
I think first things first, what we have been saying consistently is that for FY25, we will do better than what we did last year. And obviously the target would be to see whether the financial year we can do 11%. I think that's what we would be targeting internally without having to take a price increase. So I think that's, and we are talking about the full year because, quarter on quarter, there could be variations, multiple reasons why variations happen. I think our business is best to look at the full year performance and, the growth numbers, etc., on a full year basis. So that's what we have said, and we continue to talk about that itself. That better than last year in terms of growth. Last year we did 10.4, not without having to take a price increase. I think that's what we are all aiming for. Coming to Swasthfit, last financial year Swasthfit was about 22% of our overall revenue portfolio. First quarter, we did about 25% of the portfolio revenue was with Swasthfit. So we continue to see momentum on Swasthfit, and given that we are increasing our reach further into, tier 3, tier 4 towns and other geographies also, we have still got a lot of confidence that, we'll be able to keep growing the Swasthfit portfolio. At least for the next, near future that we see.
Right. On that 11% growth guidance itself, assuming you do not take a price hike, I wanted your thoughts on how to read the volume versus realization growth here, because on the one hand, your realizations would be propped up by some of your specialized tests, and on the other, there would be some of the offers, as you said, you're penetrating into newer areas, etc. as well, that may pressurize your realizations. So this 11% growth for this year, X of any price hikes, how should one look at in terms of volume and realizations?
So again, I think, let me reiterate, we are saying growth better than last year. Last year was 10.4, so the number starts from 10.5. Yeah, but we'll obviously be targeting somewhere around 11 if we can get there. And this is again a full year picture. So coming back to the growth mix, there are certain factors which are helping us getting a better mix. So first and foremost is SwasthFit itself. That is a higher realization, and therefore it is accretive to improving the mix. Second is specialized tests, like you pointed out, that that is another part of the business. As it grows, it helps us on the revenue per patient side and a better mix. Plus, we are also seeing some benefits likely to accrue through some better geography mix, which we are also working on.
What does that do to your margins? Because last year you did closer to around 27-28% margins. What's the guidance for this year?
So the guidance for this year is margin similar to last year, and that's what we are even last year, if you see the margins, there was a bit of a flow through because of the price increase that was taken. But we want to really look at maintaining our last year margin level, and that is without having to take any price increases as we intend for this financial year.
So to sum it up, Mr. Banerjee, just sort of a bigger picture question, and I take your point that we need to have normalization of couple of quarters, leave COVID behind, to get a very clear understanding of the growth rate the business can operate at. So while 10 to 11% might be the numbers we're looking at this year, I mean, what's the aspiration? Your margin profile at 27-28%, probably investors will have no complaints there. But what will be the aspiration on growth? And in that context, what is going to be the rollout plan, the expansion plan in the West? I don't know if South is a big market you'd look at, because you already have a dominating position in the North.
Yeah, so we have a kind of, geography-wise, slightly different strategies. So North and East, which is our, core markets, where we are going quite deep in terms of our expansion. I think we've been talking about, going into tier 3, tier 4 kind of markets, and that is predominantly in North and East. And those are, that kind of is helping a bit in terms of, our presence, as well as our ability to reach a much higher number, of people. And it's a very populous geographies like, UP, Bihar, etc. We are really going deep. So I think that's one part of it. West, we have done, Suburban acquisition. It's almost about, 2 years plus there. And that is the brand and on the platform on which we are riding. West is now contributing close to about 15% of the overall revenue. It's become quite sizable for us. And, the focus on that brand and that geography is going to be to maintaining the two brand strategy and a lot of focus on Suburban. South is also, an area we are now looking at, where we are, we stated this earlier, is we are open to looking at organic as well as inorganic play for South, because South currently contributes, single digits to our overall revenue, and we would definitely want to improve there.
Found anything interesting? So for the South, have you found anything interesting, and what's your appetite? What is the right size target that you would consider? And I mean, what's the thought process? Since you're clear on inorganic growth in the South, will you be using internal cash, size, and timelines?
So there isn't anything really definitive on the table right now which one can share. But, we are obviously, looking at opportunities, and we are really not, looking at size profile as the key driver. I think it is more important on how and where we can get access.
Got it.
And obviously the quality of the asset, as well as the valuations, etc. That so this is an ongoing process.
All right.
So whenever we have something interesting to share, we will share that.
All right, Mr. Banerjee, we'll leave it there. Thank you very much for your time. Appreciate it. And thanks again for joining us. Now, there's 2 minutes to go for today's big blockbuster listing, right? PN Gadgil. And I think, it's going to be another big one because the indicative pre-open rate is about 70%, 73% higher in the pre-open. There you go. Those are pictures which are coming through. Ashish Kumar Chauhan, CEO MD at NSC, and I think the management team will come up and ring it in. So 354 on top of the issue price. It's expected to come to the market at about 834 rupees per share. So big one once again. Actually, it kind of segues neatly into this next discussion because 2024 has seen a total of 57 sort of completed IPOs so far. The number is similar numerically to 2023. But these same 57 IPOs have raised more money in the first 8.5 months of this year as compared to the whole of last year. Debashish Purohit is co-head in India Investment Banking, Bank of America, who's joining us now. Debashish, it's great to have you with us here. Good morning. Just a quick word on, it's getting bigger and bigger, isn't it? I mean, I think natural to expect it. The size of what's coming to the market is getting bigger, and I think the pipeline ahead is much bigger. Some of the bigger ones are all coming to the market soon. I mean, NTPC Green, there is Hyundai, there is, and there are so many others. So just wanted a quick sense from you, what's lined up ahead of us and what it bodes for the secondary market. Go on. Debashish, you'll have to unmute yourself, please.
Yeah, can you hear me now?
Yes, please, go on.
Okay, yeah. No, I think you're right. I think this is consistent with the trend that we had picked up probably at the beginning of the year. And I think in a couple of other media interviews, I'd maintained that what we'll see in terms of capital raising and IPOs in 2024 is going to be a trailer for the subsequent 12 to 18 months. And we expected the second half of the year to rush in some of the larger IPOs. The first half, you had a volume of IPOs, but the sizes were pretty small. Just to put the data in context, we've had only 4 IPOs so far this year of sizes in excess of $500 million, and 3 out of those got priced in the last 4 weeks. So this is this is a sign of things to come as we go towards the end of the year and as we turn the leaf into 2025. The IPO size is going to be bigger. In fact, I think 2025 potentially would be the biggest ever IPO year that we have seen in our lifetime.
Debashish, do you have a visibility on how many $500 million plus issues are lined up over the next whatever time frame you want to look at? And when you look at 25, you clearly have, because the pipeline is there and you can see it. What are we talking about? What numbers are we talking about?
Yeah, again, it's difficult to give a sense of the exact, quantum of the number of IPOs because if we were to aggregate everything together, a sense is probably over the next 12 to 18 months, we'll see an IPO pipeline of, maybe $25 billion plus.
Debashish, quantitatively, while the numbers are large and the numbers of companies which are coming to the markets are large as well, we haven't really seen a frenzy when it comes to valuations. At least in a lot of the companies which are being offered right now, at least they're leaving some money on the table, and thereafter, post-listing, we're seeing a bit of a frenzy in these stocks. Do you think investors have become smarter and they demand better valuations from companies which are coming to IPO, or what phase of this frenzy are we in right now?
Yeah, I think that comes back to the way the IPO market is constructed versus to the listed traded company in the secondary market. I think IPOs is still a lot of hard work in terms of putting out your equity story with investors out there. And bulk of these activities are front-ended with institutional investors, right, with both foreign as well as domestic, who do their grounds of fundamental work on the equity story and then stamp out a valuation which they're comfortable with it. Whereas you take it to the secondary market post-listing, I think then the world kind of takes over with all this retail and high net worth and participation, which takes it to a different level. So there's a bit of a dichotomy between the way you see the so-called frenzy in the secondary market and the way IPO pricing are constructed, which is why you see I think the pricing of the IPO is much more fundamental driven largely led by institutional investors, and then kind of the secondary market takes over, which is a result of the unprecedented liquidity flow that we're in the middle of.
Hi, morning. So that's on the primary market side, but the secondary market itself has been so hectic, right? Investment bankers probably have had such a busy year. So many secondary sales where either promoters are selling a part of their equity or early stage investors are cashing out, PEs are checking out. Do you expect this activity to remain as hectic, as heightened as what we've seen so far in this calendar year? And also, what are the triggers at play? I mean, earlier when we asked this question to a lot of people in the market, I think the response is that PEs have their own compulsions. They need to go out and pay out their investors. But what's your sense? Is this the result of a huge amount of domestic liquidity? Will it continue to be as elevated?
No, I think there are 2 or 3 reasons, right? One is that if you look at the construct or the cap table of the new IPO going companies, they are dramatically different than the variety that you saw, let's say, 5 to 10 years back, right? So the most of at least the newer age companies coming to the IPO market have a much more diversified cap table in terms of, multitude of investors who need an exit over a certain time frame even after listing, which means there's much more supply to come even in the aftermarket, which has been the case with, I think, most IPOs which has come to the market last 2 to 3 years. So that is reason number 1. Reason number 2, I think the liquidity profile of Indian market has transformed materially over the last 3 to 4 years, giving confidence to both pre-IPO investors as well as private equities and sponsors to monetize effectively without creating any market disturbance on the stock price. So that is reason number 2. The liquidity profile is making people confident. And third is obviously, I think we have seen a wave of investments from the PEs, which is kind of maturing to an extent. I think people are looking at exiting some of those old positions before they rebuild their new positions. So I think these 3 factors together will continue to make the secondary block market.
I just want to quickly make a mention of right on point, right? PN Gadgil, the listing is on your screen, and it's a super bumper listing, 70%. Well, there goes the Ganpati Bappa,
they're from Pune, so it's only
absolutely festive mood there, right? And they sold stock at 480, and it's coming to the market at 800 plus. So as good as it gets. As I think we were discussing earlier, it's not just on day 1. In many of these cases, we've seen day 2, day 3, day 4. I mean, action continuing.
But just a word on the valuations. When they sought 480 rupees in terms of valuation, they were looking at around 6,500 crore in terms of market cap. Right now, it's closer to around 11,000 crores in market cap. Earlier, the trailing price to earnings was close to 42. So right now, that increases obviously to close to around 70, 73. But at 11,000 crore as well, the last time the management joined us, they said that FY27, their revenue targets are 10,000 crore on the top line with 10% margin. So assuming they do about 1,000 crore EBITDA in FY27, along with 500 crores in terms of net profit, at 11,000 crores market cap, it's still at around 22, 23 times 2-year forward earnings. And that is comparable with all the others. And when the IPO for PN Gadgil opened, just before that, all the other gold stocks hadn't seen a bit of a rally. So in that interim period of the last 4 or 5 days itself, we've seen a massive surge in the likes of PBZ or Senco or the other players as well. So all of that implies that there was expected up move in terms of this listing. And now at around...
at a net level, Mangalam, 10,000 crore top line, at a net level, what kind of numbers?
So at an
EBITDA level, 1,000 crores.
Yeah, so assuming 10,000 crore top line with double-digit margin, the base double-digit would be 10%. That's 1,000 crores. And, take out around 400 crores from depreciation, EBITDA and tax, etc. 500 crore roughly would
27.
be the net profit that you're looking at, 27. As compared to last year where they did a net profit of close to around 150 crores. Obviously a large part of that would be reduced because of the number of stores that they will add and also, finance costs coming down with the debt repayment.
But Rafi, you're saying that all things put together, 22 times 2-year forward earnings.
2-year forward.
2-year forward earnings. So let's see, the market maybe is willing to take that at least at this point in time. Debashish, to get back up, this is obviously on the primary market and we've had another blockbuster listing just as we speak. But my question, going back to that question, that was more for the secondary market. Forget the primary market for a second. Even in the listed space, there is so much hectic deal activity, right? Where promoters are either cashing out a little bit or PE guys are checking out. So more on the listed market space, will deal activity continue to be as robust as what we've seen so far?
Yeah, no, absolutely. That's exactly what I was saying. I think we do see that level of activity even in the secondary market to continue. And that is driven by the shifting nature of the cap table, right? Because, 10 years back, you had a largely promoter-owned entities coming to the IPO, and the maximum float which will come to the market is the bare minimum, which is 25%. Now the new generation companies coming to the IPO market are much more diversified in terms of pre-IPO cap table. You have multiple investors sitting over there who have a certain investment horizon, so they need to exit their positions over a certain period of time. So the free float, the effective free float which is coming to the market is significantly larger than the IPO class of like 2010 or 2012 or 15. So we will continue to see a significant amount of activity in the secondary market on a go-forward basis.
Cool. Just to take the point forward, how much of this activity that you're seeing, again, primary market, right, is in your estimation growth capital, and how much is it sort of exit by investors? So this year we've seen about 64,000 crores worth of IPO. Have you looked at the numbers? How much of it is going into building out businesses, setting up plants? How much is it just sort of existing investors getting out? And that $25 billion number which you put out over the next 12 to 18 months, I mean, same question. What would it be?
Yeah, I think if you go back in history, I think Indian IPO market have been largely secondary driven, right? I think the ratio could be anywhere between, call it 70 to 80 to 90% of IPOs coming to the market are secondary sale rather than primary sale. And even if we look at the next batch of large IPOs over the next 12 to 18 months, a large part of these would be secondary sale rather than primary proceeds. That's not going to change in my view.
Okay, you're saying that 70-80%, that high, I mean, essentially, is all secondary sales, and perhaps it will be in that ratio going forward as well. Got
That's
it.
Right.
Just one last question. What are the hot sectors right now where we should expect to see maximum deal activity going forward, Devashish?
I think it's pretty much everything, right? I don't think there is one particular sector.
There are no cold sectors. They're all hot.
Well, you have the all-time favorites like consumer, financials. The technology is coming back in a big way, as we saw through Ola and first trial listing, and the significant pipeline which is building up. Healthcare is pretty topical. I think the one sector which has stayed away or rather absent from the capital markets, which is infrastructure and renewable. That's because the deal activity in the private space is so robust. They haven't probably found the reason to come to the public market, and hopefully we see that change over the next 12 to 18 months. But save that, I think pretty much every other sector is in play.
New economy, people are saying because it's new economy, growth prospects, sunrise sector, etc. are doing extremely well. Old economy doing even better because they're saying it's not sunset yet for this sector because not anyone else is investing in these spaces right now. So maybe there is a longer runway than one was expecting. And middle of the road, obviously doing extremely well anyway.
So, to end things, Devashish, I'll go back to Mangalam's original question on valuation. So as all these hot sectors keep coming to the market, have the lessons been learned, and will it be very different from, say, 2021? I mean, we all remember the way Zomato IPO'd and a lot of the new age companies came in. So as we get the Swiggies of the world and maybe some of these newer businesses, even renewables, which right now you're saying is within the private domain, as and when they come to the street, what should investors expect on valuations?
And just to add to that, what could the next accident be? Because back in the day, we've learned lessons from those accidents. Now we've moved on. What should one be mindful of?
Again, it's like, markets turn in a cycle, right? I think we saw a pretty long bull run, then we saw, some bit of a pause in 2022, and then the markets have come back in a pretty big way. It's very difficult to predict, what could be waiting for you in the next turn. Of course, I think valuations are extremely important to sustain this market. But I think what makes us comfortable and confident is that the exuberance that you see in terms of valuation in the secondary market has not translated compared to the IPO market. The IPO market is still very, very fundamental driven, bottoms up, institutional investors driven. which is why you're seeing this divergence of what you get at the IPO at valuation versus what some of the stocks are trading in the aftermarket. I think so long as that discipline continues, that's good for the primary market, and this market is here to stay. It's difficult to say what's the next accident. I think we as market participants we are optimistic, and we look forward to the positive signs rather than worry about the potential accidents around the corner.
No one sees it coming ever. It happens when it happens, but the going is good. Thank you very much, Debashish. Appreciate you joining in and running us through your perspective on the sort of fundraise activity, which is robust, as Debashish has been pointing out. We'll take a quick commercial break here. We're going to come back in just a bit from now, and we'll put the focus on commodities. Manisha is here with us.
Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now, at this pace, it will not be a surprise if by the end of the year, we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
So Nazara is focusing on its for FY25 its growth primarily through gaming. So what are the plans for the next few months or next quarter?
As you know, core gaming has been an important focus for us. Recently, we acquired 100% stake in Kidopia. We also acquired a studio in the UK called Fusebox. So I think we are very rapidly expanding our core gaming business. We should also be a high margin business for us, generate strong cash flows, and we can keep redeploying in the years to come.
So talking about Fusebox, so Nazara recently acquired Fusebox and Paperboat apps. So what was the idea behind acquiring these two?
I think wherever there is core gaming IP, which we can kind of acquire and own, then we can evolve this IP over a long period of time. So Fusebox is building IP-based games. Kidopia is already a very well-established IP in the world of kids. I think our objective is to acquire assets which have gaming IPs and then keep building and monetizing them.
So the news came out that Nordwin has recently also acquired Comic Con. So with that, what can the comic fans in India expect from the next edition of the Comic Con now that Nordwin has acquired complete?
Look, the attention of the youth is a very valuable commodity, and Nordwin's focus on esports and anything else that the youth is interested in becomes very relevant, which is why they acquired Comic Con. I think today Nordwin is focusing a lot on expanding Comic Con to many more cities and doing it.
Welcome back. Well, let's straight away dive into commodities and figure out what the headlines are there. Manisha is here with the latest action. Manisha, over to you.
Thank you for that, Surbi. Well, I'm looking at agriculture commodities. Well, everything in commodities actually is surging, whether it's about metals, precious metals, energy, and agriculture as a space. There are 2 or 3 themes which really seem to be working right now. One is the decline in US dollar index, which is back again below 101. The second is the US Fed meeting and this whole uncertainty about whether we are going to see a 25 basis or a 50 basis point rate cut, and that really seems to be keeping long positions intact for many of these commodities. The third thing, especially when you talk about the agriculture commodity, is the weather concerns, the higher freight charges after all that's happening in Red Sea, and that is keeping many of these commodity prices higher. I want to talk about Arabica coffee because that is trading at a 13-year highs. Brazil, which is the largest producer, has adverse weather conditions, and the Robusta prices also, by the way, seem to be increasing, and this is after the typhoon Yagi hitting Vietnam, which is again a major producer there. Well, after coffee comes cocoa, and here the prices are trading at a 2-week highs. The markets have seen the deficit continue for a 4th straight year in 2024. Also, there are supply concerns from West Africa, Ivory Coast, and that has been supportive. Talk about cotton, and while of course it's an industrial agriculture commodity, but we also have seen gains here to a 3-week highs. Well, the USDA has cut production for 2024-25 to 14.5 million bales. Also, the global output has been revised on the lower side. Consumption continues to be on the stronger side. It is a small crop this time around in US, Pakistan, and India, and that has been supportive. Rubber continues to be an outperformer within this pack. It's trading at a 2021 highs, and Typhoon Yagi has impacted production here as well, and we are looking at lower production, by the way, in various producing countries like Thailand, Malaysia, etc. Sunflower prices gained 6% in the overnight market. So as I said, everywhere that you look, you are looking at stronger gains continuing. I'll get the final chart on your screen. Then this is the month-on-month agri-commodity price data. And as you can see, there are no losers there. It's all gainers, from soybean to wheat, palm oil, rubber, coffee, everything up between 2 to 10% onto this one. And that really continues when it comes to rice and sugar kind of commodities as well. You have 2 to 5% of gains on that too.
All commodities up over the last 1 month, and a big surge in prices of coffee and cocoa. Will be very interesting to see how the margins of companies like Nestle, etc., perform going forward. But speaking about these commodities itself, we take a short break. On the other side, we have Lata Venkatesh joining Sunil D'Souza, the MD and CEO at Tata Consumer Products, to talk about the consumer space at large, speak about commodity prices, and get in a word on their business as well.
Larger scale, and they will make announcements around that very soon.
Does the low-cost positioning then change as well as you move towards international travel, as you move towards adding things like business class and loyalty programs? Does that cost position at the back end start to change as well?
It depends a bit. I mean, what is your definition of low-cost position? We are determined to keep our cost leadership. Two days from now, flying to a city is still 3,000 rupees. So for that, we need to keep that cost leadership out there. And we're not making any changes on that product on that side. But on top of that, we start to build what we're doing. So if you see our business class, which we are going to introduce, we do that in what we call the nation's busiest and business routes. 20 a day between Delhi and Mumbai, 14 a day between Delhi and Bangalore, 13 a day between Delhi and Hyderabad.
You said that these decisions are taken when you believe that the revenue advantage outweighs the incremental cost that you will have to take. Can you give me a ballpark estimate of what, for instance, the business class introduction, national expansion are going to result in terms of a revenue bump up as well going forward?
So the business class will be introduced in November of this year. It will start on Delhi Mumbai. Of course, we get one plane. It will start as we fly 20 a day. One plane is not enough. So by the end of this calendar year, the entire Delhi Mumbai operation will invest.
Welcome back. India's recent growth story has been fueled by capital goods, not by consumption. Although the first quarter GDP did show a welcome 7.5% growth in private consumption, the July IIP number shows that consumption, especially of non-durables, I mean FMCGs, is subpar. To get a handle on the consumption scene at a macro level and at a micro level, I have with me the Managing Director and CEO of Tata Consumer Products, or TCPL, Mr. Sunil D'Souza. TCPL itself, of course, posted a 16% revenue and a 22% EBITDA growth in their first quarter. Their international and unbranded divisions did very well, but tea and the recently acquired Nourishco brand of drinks had a subpar quarter. Mr. D'Souza, good morning and thank you very much indeed for joining us.
My pleasure.
Well, let me start with the macro question that prompted me to invite you. We still see disturbing signs even in the July-August consumption numbers. Are these correct, or do you think that the consumer is still biting? Can you give us a picture of the rural and the urban consumption?
So overall, Lata, if you look at it, I think you heard a lot of commentary from the FMCG majors during the end of last quarter saying green shoots and people are bullish for a recovery. I would say I would still wait and watch because while the recovery will be there, I think it will be gradual. It will not be back to double-digit growths of the past very quickly, and for a couple of reasons. A, I think the recent weather phenomena impacting rural with drought in May, June, and then excess rainfall. I think that's part number one. Part number two is overall, while you look at inflation, if you disaggregate it, I think food inflation is significantly higher.
Yes.
So from that perspective, I think there is still a little bit of pressure, which I would think when the crop season comes out, we should start seeing it easing up a bit. That's number one. Number two, there is a trend, however, that rural was significantly lagging urban. I think rural is starting to catch up with urban right now. So from that perspective, it looks good. But double-digit growth, I would say, some time to come.
Okay. In terms of volumes, how have you done Your second quarter is almost up. We have only about 2 weeks to go. So did volumes look better than Q1?
I would say volumes broadly in the same ballpark as Q1, not a significant difference.
Okay.
But that said, we are starting to see various fluctuating effects of commodity prices.
Oh.
Tea, for example, I mean, because there was drought in the north and then excessive rainfall, tea prices in the north are about 25% off. So that will start moving into the consumer domain as inventories run down. Right? There was a bit of excess rainfall in Gujarat and brine has shot up. So that means salt prices should be slightly higher. Coffee, I'm sure, is I would say the latest gold from a commodities. This thing hitting, I think Robusta hit about $4,500, which is more than 2x what it was 1 year back. So commodities complete topsy-turvy ride. I think that is the one piece to watch out for.
Okay, no, that's very useful information. Let me start with the most premium of items. Is the premiumization trend still intact? Premium products do well. It's the mass products that get hit by, inflation and drought. Is that a fair assumption?
I would broadly agree with you, and that's exactly what we're seeing in our portfolio as well. So while overall we talked about tea being under a little bit of pressure, the premium and the mass premium continues to do well. It's the lower segments which are under pressure.
Okay.
2/3 of my portfolio is now premium to mass premium, which is quite okay. In salt, value-added salt is growing at high double digit versus base salt, which is still chugging along at single digits. So overall, that trend, I think, you will see for some time.
Okay, just a word on the overall numbers. You did revenues, 16% in first quarter and 22% EBITDA. Repeatable?
Again, if I break it up, Lata, out of that 16%, base was 10.
Okay.
And the balance was due to acquisitions.
Yes.
I would say will be broadly in the ballpark.
Okay. Okay. What are the strengths? Which has Narishco re-emerged after a quiet summer beaten by the terrible summer? Likewise, tea. Within these, are you seeing any improvement? Those were the ones that didn't do well in the first quarter.
I would say for tea, broadly, the trend remains constant. Volume growth, I don't think we're seeing it coming up back rapidly while we are holding market share more or less. There is a bit of stress on the category overall. That's number one. Number two, to answer your question on Narishco, it was a couple of things. One was the high temperatures because of which we didn't see out-of-home consumption, and our Narishco business, especially with the cups, Tata Gluco Plus, etc., is primarily out-of-home. So that was number one. Number two, there is increased competitive intensity in the beverages space with the entry of other players. And I think we were slightly late to the party in terms of correcting our pricing and go-to-market.
Okay.
So I would say we're probably still one quarter off to see the Narishco growth coming back totally. But broadly, directionally, month on month, we are seeing an improvement.
Okay.
The other big priority for us as a company is to make sure that we bolt on Capital Foods and Organic India, are two acquisitions. Last quarter, Capital Foods grew 9, Organic India was -2. Directionally, we're in the right ballpark. We finished the integrations. Now the engines of distribution, innovation, marketing, as they start firing, and we are seeing growth trend in the right direction.
Okay. I'll take your point that some of the trends of Q1 are continuing in Q2. But for the full year, as you said, as the harvest hits in terms of money at the hands of the consumer, will second half be much better? I mean, better than your 15.3% margins, your 22% EBITDA, will both be better?
So overall, Lata, I do expect to be on a significantly better trend in the second half versus the first half for a couple of